Hello, it's me, and we are back for the FOMC stream. We have Kevin Warsh's first rate decision, his first Fed meeting as FOMC chairman, and it is highly likely that we pause interest rates. What the attention is going to focus on today is Kevin Warsh's tone. I almost said Jerome Powell, but what the attention is going to focus on today is what Kevin Warsh has got to say regarding interest rates, the path of it. We also get the dot plot, what's called the SER, the summary of, or SEP, the summary of economic projections goes live. This essentially tells us where each Fed member thinks rates are going for this year and beyond, inflation, and more data coming out right around that time. So do me a favor, hit the like button as you join the stream. Subscribe if you haven't yet, and we'll see what we get. Another focus is going to be on what the actual statement says. You know, Polymarket has it priced in that we'll get 40 plus times of the word inflation. I think it's not priced in. It's about 46% likelihood. I don't know if they're going to say inflation that much, but as I said this morning, the S&P and the NASDAQ are mostly flat today. You can take a look at it here. We have 27 minutes before we get the FOMC decision. 27 minutes. But we're here today. What's up, Steve? Blow my mind. Ricky, Live the Dream, Callie, Shal, Alex, Deckers, Santa, Emmis, Startup Family, X, Sabars, Keith, K, GJ, CJ, Franklin, Punch, Pew, good morning, DAF, Eyes by Rhonda, AI Intelligence, CYV, VP, Andrea, Jamie, Sklee, Pawn, good morning, guys, or good afternoon, it's the afternoon right now. And we have the FOMC decision in 26 minutes from now, 26 minutes. Let me know if you're hawkish or dovish today. What's up, Danielle or Daniel? What's up, Mohid? What's up, Kazuma? What's up, Hybrid? What's up, Kay? Good afternoon, guys. Let's see what we get. Will Kevin Warsh be hawkish or dovish today? Will he be hawkish or dovish? Let me know. Let me get a poll going live. Hawkish or dovish tone today? Will Kevin Warsh have a hawkish or dovish tone today? Hawk, dove. I'm going to go with neutral with a slight hint of, I'm going to go with neutral but a slight hint of dovishness today. A slight hint of dove, you know. Warsh with a side of dove is what I think we're going to get today. I think he's going to be mostly neutral. I don't think he can come out guns, you know, blasting today with regards to rate cuts. I think, you know, the president did pick him, so I think he's going to be more dovish than Powell, but I don't think he can come out just being ultra dovish just because of the current geopolitical situation. Oil prices still elevated from pre-conflict levels, although we have seen some decreases in oil prices. Oil right now, if we take a look at it, CL futures, he can't come out guns blasted with 4.2% inflation. Right, exactly. Yeah, I believe so as well. I think he's going to be a tad bit dovish. Just a little bit. I don't think he can be ultra dovish pushing for rate cuts. And I don't think even if we had a situation where we could cut rates that Kevin Warsh would want to do quantitative easing, money printing, or anything like that. I think he's been historically critical of that from 2020 and 2008 and 7. And so I don't think he's going to be pushing money printing or anything like that. But there's the poll. The poll is now live. You can see oil prices have stabilized roughly around 75s. So oil prices have had a big decrease lately. The S&P 500, you can see, is sitting at 75, 73 here. But we'll see what Powell has got to say. The poll is now live. What's up, Faye? Good afternoon. Once we dip our toes in 3-ish inflation, I think we're going to be good. I say he'll be more dovish with a tad of bearish, but at the same time staying flat. Yeah, that's what I think. A tad of bearish. So you think he's going to be dovish with a tad of bearish? Okay, I think the market wants dovishness, be honest. I think the market wants rate cuts. Bitcoin, crypto especially wants rate cuts and stuff like that. But, yeah, look at that gold here. We can take a look at gold. Gold is fearful of high yields. Look at gold rip here right now. Gold is pumping up ahead of this FOMC decision. I'm not sure really why either. Let's see if there's a reason why and a catalyst. Spot gold rises to over 1%. Natural gas inventory rising 75 last week ahead of Thursday's EIA report. MOU hasn't been signed, but either side can walk away until a binding deal is in place. More stuff about nuclear. But this is something over the last 3 minutes here. Look at these gold moves for gold. Gold is at 43.91s right now. So gold is honestly moving here. We're moving. Did I say Powell? I meant Kevin Warsh. Listen, it's my first. I've covered dozens and dozens of Fed meetings. This is my first one I've ever said. I haven't. This is my first one without Jerome Powell. So if I say Jay Powell, forgive me. Don't yell at me too much. We're trying over here. We're trying. But yeah, let's talk about it. So the summary of economic projections goes live. This happens every other meeting. So every 3 months, basically, we get what's called a summary of economic projections, or the dot plot. It shows where each member thinks rates are going, inflation expectations, and more. Yeah. And yeah, we're getting that live. Looking at the poll so far, we asked people, will Kevin Warsh have a hawkish or dovish tone today? 52% think he's going to be dovish today. 52%. It's down to 51% now. 49% think hawkish. I gotta say though, guys, the ones that think he's going to be hawkish, I don't necessarily think so. I don't think he's going to be an ultra dove. But who knows, man? Maybe he comes out, like, hey, we're in the middle of a conflict. Oil's up. Inflation's high. We got 4.2% inflation. Maybe he comes out being hawkish, saying we fear inflation more than weakness in jobs. Number one, just to give you the other argument for that, is that the jobs report we've seen lately have been incredibly strong. Incredibly strong. We had JOLTS strong. NFP data, very strong, shocking print. We had ADP's monthly report, very strong, shocking print. Markets reacted negatively to those job prints. We had a lot of data showing strong jobs. Market went down on those reports. What does that mean? That means the market at this point in time fears inflation. Now, maybe that dynamic is easing a little bit because of the deal that is potentially going to get signed on Friday. Oil prices are down for sure over the last few weeks. So maybe markets fear inflation. That's less now that oil is going down. That's certainly possible. If we take a look at yields heading into this FOMC decision, I like to look at like 2-year yields. But if we take a look at yields heading into this decision today, we're currently at 4.068%. On the day, yields are up slightly, I think, slightly on the day. But you can see they're down since this conflict news happened. And so they are starting to fall some. You can see this is 2-year treasury yields. This is before the deal was really announced last week. And now we're all the way down here, still kind of sideways over the last few days heading into this FOMC meeting and decision. We can take a look at the CME watch tool as well here, guys, because the Fed watch tool has been pricing in roughly a 60% chance that we'll get a rate hike by the end of the year. And so right now it's about 99.6% likely we're going to pause rates today. And that's what we're going to do. Anybody that tells you we're going to do anything outside of pausing rates today, I'll say this once, I'll say it again, has no idea what they're talking about. They're just saying shocking things, hoping to get attention, probably. We're going to pause rates today. This is almost certain. It's 99.6% likely, 0.4% chance that we're going to do anything else, and that's incredibly improbable. And I don't think Kevin Warsh is going to step in and make enemies in terms of pushing for rate cuts. And he doesn't have the voting power to necessarily get that done anyway. But if we look at December, at this point in time, it is over 60% chance that we raise rates by the end of the year, that we have higher rates at the end of the year in December than we have now. Roughly 63% chance likely. So still very, very high probability that we are going to keep rates in the year with higher rates than we have now. And this Fed meeting is the first time we're really going to hear about this. So this Fed meeting is the first time we're really going to see where Warsh stands regarding everything like that. When Warsh was first confirmed as FOMC chairman, the market went down. It did not go up when Warsh was confirmed. And a lot of people thought that Warsh was a lot more hawkish than some of the other picks that the president had regarding the FOMC chairman. And so this is going to be the first day, the first statement, the first time we're really going to get a look at where Warsh stands regarding interest rates. There's been a lot of talk about Warsh as well, specifically that Warsh might do something kind of a hybrid format in which we cut rates, not today, but sometime in the future, that we might cut rates while also doing a tightening cycle in the Fed's balance sheet with quantitative tightening. There's a lot of talk about that. The Bank of Japan is kind of doing the opposite, where they're doing QE but raising rates. And we'll see if Warsh actually ends up doing that. Warsh's historical stance on things is that he has been fearful of quantitative easing money printing. So he has historically criticized, saying that we basically printed too much in 2020. And I don't necessarily even think he's wrong in that instance, right? Inflation got really high after 2020. It wasn't just from QE and printing. It was from a lot of different things. But yeah, he's been really critical of quantitative easing. So we'll see where he stands on that front as well. But yeah, 2 p.m. we get the statement. We get the summary of economic projections and the dot plot released simultaneously. At 2:30, we have Warsh's first press conference as chair. Both events are going to drive separate market reaction. The statement moves prices first, and then the summary of economic projections and all that stuff is going to move prices. And then 30 minutes later, it's going to pivot to what Warsh has got to say regarding tone. There's been a lot of talk in the last few Fed meetings about what's called an easing bias in the Fed, right? This is one of the reasons I don't think he can be super dovish, because there's been a lot of kickback regarding what they call describe as an easing bias. Basically, the Fed has an easing bias where they want to stimulate the economy more than they want to, restrict it. The Fed statement has carried language indicating they're inclined towards future rate cuts. Specifically, the phrasing suggests policy adjustments would lean toward easing rather than tightening, like I just said. Why it matters is that the 10-year yield direction for the next 6 months is going to matter. Gold's path, the dollar tends to move up with higher yields, right? So the more hawkish summary of economic projections, the more hawkish, the Fed is, the higher yields are going to be, and the dollar generally pushes up on that. Why? Because when people want to buy bonds because they're paying out higher yields, they have to use the US dollar. So it makes money flow into the US dollar and ultimately makes it stronger when yields go up. If you look at the dollar today specifically here, we can take a look with that dynamic in mind. Dollar is up slightly today, which means yields are up a little bit today probably as well. We can look at long-term bond prices, which inverse yields, and see that we're kind of in the middle here with bond prices. It's not an exact science because these are longer term, but still relevant. And so again, we got a couple of different outcomes. We can see statements read similar to the last meeting. If that happens, it implies the Fed is still leaning toward cuts despite PPI and CPI and yields and oil. Markets only price at about 15 to 20%. We'll see if the what they describe as that easing bias is removed. So the Fed isn't changing rates today. It's 99% priced in. We'll see if they remove the easing bias from the statement. That's what I think a lot of the focal point is going to be, outside of like the summary of economic projections today and more, is whether we have what's described as an easing bias still in the statement. So there's key numbers to watch here today. One of them is the 2026 median dot. The last summary of economic projections from March showed 2026 median around 3.5% for rates. Today's revision is the most important number in the SEP. We'll see if they move that. They think rates are going to be higher or lower than that 3.5%. For 2026. 2027, the last one showed it around 3%. Remember, we're at, what are we at? We're at 3.5 to 3.75. Yeah, we're at 3.5 to 3.75. So they're showing next year we're going to be all the way down to 3% potentially in the last summary of economic projections. And so again, that would be lower than we are now, obviously, by 50 basis points or so. This shows the terminal rate the Fed expects for next year. Longer run rates shown at about 2.75%. So is Warsh reportedly not publishing a personal dot plot, is what I've heard. So that's kind of a break from convention. New chairs typically establish their dot from day one. We'll see what happens though. Apparently, is Warsh not going to be publishing his own personal one? I'll have to look at that. Let me see the chat here. How's the chat doing? Vote John for president. No. Warsh will continue what Powell and friends started. I'm here, just got off the phone with Jay Powell. Okay. If they cut right now, they might overcook everything. Should be done, but I'm tempted to short. Honestly, it's a risky move right now. We don't know what they're saying. We got 15 minutes. Made bad decisions, didn't take profits, now I'm break even. Hiking rates would be done. They should cut. Yeah. Come back to his Powell. Do you think it's best for the economy for him to be hawkish or dovish? I think it's best for the economy right now for him to be neutral, personally. And why do I say this? I say this because we're in the middle of the Iran conflict. I don't think it's good optics to really be pushing for lower rates right now. Labor market seems okay. And again, it seems okay. Well, no, who knows if those numbers are accurate, but the labor market seems all right. Now, I think once this conflict ends, if oil starts going back to normal prices and we see easing in inflation, I think we could probably justify some rate cuts, because rates have been higher for a long period of time now. Higher is relative. You know, we're looking at the last 20 years, rates have certainly been higher than they're used to. If you zoom all the way back out to the 70s or 80s, that changes things. But in the last 20 years, rates have been high. The last 5 years have had much higher rates than people are used to. And that, I think that is pushing things down, making people a little nervous. So yeah, he don't like projections. Hey, what's up, Native Gamer? Just rebalanced my portfolio. Didn't read FOMC rates for today. Yeah, FOMC decision is today, guys. Do me a favor. Hit that like button. Hit the subscribe button. Warsh doesn't have an option but to continue higher for longer at 4.2% CPI. Yeah, CPI is high for sure. PPI is higher as well. 100% agree with you. But again, if it was me, I'm neutral, right? Like, I think he kind of has to be neutral right now, and that's why my guess is neutral today. I don't think it's an easy path moving forward. Like, he has entered the FOMC chairman job with a Middle Eastern conflict raising the price of oil, with inflation over 4%, and a lot of other stuff going on. And so I don't think he can just jump in and cut. But at the same time, you know, the president did choose him recently, which means that he must be saying things the president likes. But yeah. Again, 2 p.m. Eastern Standard Time. If we get rate cuts, will the market go up? I think if he's dovish, the market will probably react positively to that. But it's never a certainty. Like, we don't know what we're going to freaking get. It's definitely not a certainty. And so, yeah, I think, yeah. I think market generally wants dovishness. I think Bitcoin especially wants dovishness. But I don't think it's an easy reaction. Gold generally fears higher yields right now because of inflation and all that stuff. So gold has been reacting well to gold has been reacting well to lower yields. So I'm sorry, gold wants lower yields, because when yields are high, people buy gold less because they're buying bonds instead, because they're paying out more. So we'll watch gold. We'll watch the NASDAQ. We'll see what crypto and Bitcoin do. But yeah, it's an interesting time. We have 11 minutes left, chat. 11 minutes left. Let me prep for this. Yeah, so I'm curious to see if we get a dot plot today. We're going to have PCE, which is inflation forecast today when this goes live as well. Yeah. Will we get a dot plot today, guys? The dot plot was never going to work. They do that. Hi, guys. Let's have a great FOMC trading session. Because I think you got to pick one, bro. Honestly, we're basically neutral in the poll as well. We're at 51 to 49%. So, hey, good luck, Doom. I'm going to have to turn Telegram notifications off. It is unlikely that we have even felt the aftershocks of oil being constrained for nearly 4 months. I say they raise and do higher for longer through 2027. You think they raise rates today, Pet? Genuinely? Does anybody think we're raising rates today? Does anybody think we're going to do anything outside of a pause? If so, let me know. I can't imagine we do. But if we do, you know, who knows? People always seem to bet against the odds. But look at the NASDAQ jump here. So the NASDAQ's jumping up a little bit right now. Yeah, there's no chance we're not going to pause today, guys. Like, again, we're definitely not raising. Dude, the president would have an absolute fit if we raise rates today. The president would have an absolute fit, dude. I told you guys we were going to pause today. Yeah, that text, that is coming soon here. I told you guys we're going to pause, and we're going to freaking pause today. I guarantee it. If we don't pause today, guys, you know, I'll have to wear a bunny suit every day for the next month on stream. If we do not pause rates today, that's the deal I'll make with you guys. 99.4%, or what is it? 99.6% likely we pause today. Yeah. No hike today. No, we're not hiking. I think they should raise by 50 basis points, but they won't do anything. Yeah, deal. Andreas, deal. Yeah, what we might see today, guys, is we might see where Powell's looking like, or where Warsh is looking as a base case for when rates will change. I'm guessing they're going to stress the geopolitical macroeconomic uncertainty from the conflict. Oil prices are high, inflation's, you know, not good. So I'm sure they're going to stress that, and they're going to take a data-dependent meeting-by-meeting approach. I'm sure we'll hear some variation of that today by Kevin Warsh. But we'll see. Buddy suit? Yeah, buddy suit. The tone of the stream will swing either way. Yeah, what he's got to say regarding his rates moving forward is important. Yeah, so again, Kevin Warsh is, interestingly enough, not expected to publish a personal dot plot. So, the dot plot itself, though, is a collective of the 19 Fed members and where they think rates are going. And this drops in 8 minutes. That is probably going to move markets a pretty significant amount. Look at the NASDAQ pushing here. NASDAQ up to 30,435 right now. So the NASDAQ is jumping up here as we speak. I'm checking breaking news. I don't see anything really. But it's time. It's time. Forget the buddy suit. What color was the buddy? It's a pink buddy suit. It's the Christmas story buddy suit. I have it. Listen, I don't make that deal without having a backup buddy suit. Okay, that's not what we do here. You know. Hey, thank you. Sorry, I'm late watching a video on slings. Yeah, those videos will get you. If you had to bet your account on it, bearish or bullish after the meeting. Listen, I'm going to preface this with I am not an investment professional. I have no freaking idea what we are going to get regarding today's FOMC decision. I have no freaking idea what we're going to get. Or no, I know what we're going to get regarding the decision. I don't know what we're going to get in terms of markets. It really genuinely depends on Kevin Warsh's tone. And like I said, I think he's going to be neutral, data dependent, with a hint of dovishness. You know, I think he's going to try to slide some dovish aspects of his statement and you know, his tone during the press conference. I think we're going to get a little bit of that, but it's not going to be too much. And I think it's going to ultimately be muted more so than normal because of the geopolitical stuff we got going on in oil. Hey, thank you for the sub, Irfan. Thank you, brother. I appreciate the subscribe, my friend. Are we in sub-only mode? I think so. I'll have to check, but I think we are. All right, guys, here we go. We have 6 minutes. 6 minutes. Yeah, we're in sub-only mode. Okay, good. I agree with John. Bearish. What's up, Code? I'll call you a furry. Listen, justified, I guess, in that instance. But again, it's never going to freaking happen because we're not raising rates today, guys. I've covered these. Again, I've covered dozens of Fed meetings. Every time somebody's making some wild bet, they have been wrong every single time. And so anybody making those bets, I scoff at you, okay? Making those bets. How dare you even, you know, disgrace the stream with that bet? Because it's not freaking happening. And maybe I'll eat my words, but I don't think I'm going to. Hey, what's up, Blaze? We're not cutting rates today either. We're doing neither of those things. I think cuts have a higher chance of hikes, but I think Kevin Warsh is going to eat a lot of shit if he cuts rates right now. Sorry for cursing, but I think Kevin Warsh is going to eat a lot of. He's going to get heat for it for sure. All right, guys, we have 5 minutes before the statement goes live. 5 minutes. Top 3 Fed meetings. Yeah, it is. You know, you're always right. It's not hard to be right regarding rates, though. I might be right regarding rates, but it's pretty easy to be right regarding rates. But here we go, guys. It is time. We have 4 minutes left. 4 minutes. Yeah, let me get this ready here because there's a way I could actually get the statement pretty quickly here. So let me get this ready. Okay. So today is 6/17. We're on it. There we go. Boom. Today, let me find the statement. Last one was from April. Let's get this ready here. Again, today is 6/17. All right, we're ready here. We're ready, guys. What will he fear more before we go live? 4 minutes left. What will he fear more in the statement? Will he fear inflation or the labor market more? I'm going to go with inflation. I think you got to fear inflation more. But I also think he's going to be very neutral, very data dependent. 4 minutes left. It's like watching the Hallmark channel compared to listen. We are the Hallmark channel. I'm sorry, guys. I'm sorry. Inflation. Yeah, I think the inflation's the easy bet here, dude, for sure. All right, chat. 3 minutes. Inflation's the easy bet. All I know is he's gonna say a bunch of words, but not actually say anything. Warsh will wear a MAGA cap. Oh, dude, it would be chaos. Here, the last, real quick, guys. We have 3 minutes left. This is an incredibly important question for today's. What color will his tie be? What color will Kevin Warsh's tie be? I'm gonna go with red. I'm gonna go with red tie right now. What color will his tie be? I'm gonna go with a red tie. He could also go with black. I could see him going with the black or like a navy kind of tinted blue. But Powell always wore purple ties. I'm assuming because he didn't want to influence the market with red or green. Maybe Warsh walks out with a purple tie today. I don't freaking know. But here we go, guys. 2.5 minutes left. 2.5 minutes left. Blue, reasonable guess. Navy, I think navy makes sense. Orange would be chaos, I think, as well, though. Orange, green. I would love it if you wore a green tie. I really would. All right, guys, 2 minutes. 2 minutes, we're here. We got the summary of economic projections. We have the dot plot going live. 2 minutes. We're going to see where the Fed members think rates are going this year. We're going to see PCE, inflation expectations, live. 2 minutes. That's the first step of today's Fed decision and meeting. Number one, the dot plot, summary of economic projections, and the statement are the 3 most important aspects of the next 2 minutes. Okay, dot plot update, where Fed members think rates are going, number one. Number two, statement, how much will they fear inflation? Number 3, I can't remember where I was at, but, oh, here, let me get Brennan here. All right, guys, here we go. We have 1 minute, 15 seconds left. No tie, shirt unbuttoned. All right, there's Britt. Hey, what's up, Britt? You're late. But listen, we have 1 minute until the FOMC decision. 1 minute. You're just in time, Britt.
Exactly when I said I would be.
Right, listen. You're in the break of time here today. A moment in time right now. We have 55 seconds left until the actual statement goes live. 55 seconds. In this statement, we're going to get a dot plot, summary of economic projections, and more. So, yeah, we're here today, guys. It's an interesting day. Let's see what we get. First thing first. Britt is here. First things first. All right, 35 seconds, guys. 35 seconds.
Also, I voted dovish in the poll.
Dove? I think he's going to have a tight, like I said, a slight hint of Dove. But not full Dove. You never go full Dove, Britt. A slight hint of Dove is what I think.
I've heard that. Yeah. Yeah.
All right, 20 seconds. Yeah, 20 seconds here, guys. 15 seconds. Here we go. And again, I'm telling you, they're going to pause rates right now. 10 seconds here, guys. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Let's look at markets. And here's the decision right now. I think I was a little bit early. There we go. Here's the decision. Again, markets are down initially. Look at this. Markets are reacting negatively here. Negative reaction so far in markets. We paused rates, just to clarify. But negative market reaction so far. Look at gold. Gold is dumping. Okay, so this is a very, very short FOMC statement here, guys. Look at the statement. Look at how small the statement is. The FOMC Open Market Committee, the committee decided to maintain the target range. They paused. Economic activity is expanding at a solid pace despite elevated uncertainty that owes in part to the conflict in the Middle East. Productivity growth and capital investment are strong. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal, in part reflecting supply shocks that have driven price increases in certain sectors, including energy. Very short statement by the Fed. Very short statement here. And here is the summary of economic projections today. So let's take a look at the summary of economic projections. Yeah, look at the summary of economic projections today. So that is now also live. as well. Again, we paused rates. No bunny suit for me today. But you can kind of see the new projections here. They're thinking GDP in 2026, 2.2%. PCE inflation, 3.6% for this year. 27, 2.3%. 2028, 2%. So, yes. You can kind of see these changes here. Let me get some updates on what's going on. But yeah, the dot plot update. Fed did pause, unanimous decision, removes forward guidance completely from the statement here. So forward guidance was ultimately removed completely here from this statement. Again, I'm looking at the dot plot right now. I see a lot of clusters higher than expected for rates. I think it's definitely a little bit more hawkish of a dot plot update here. We're still digging into this, but I definitely think it's more hawkish than originally projected. I think that's why the market's dropping right now. I think that's why the market is dropping. I think it's definitely a little bit more hawkish than expected here. Look at this. So NASDAQ all the way down to 30,318 here. 30,318. Dig deeper into this. Medium dot plot is now 3.8% versus March's 3.4% for 2026, up 40 basis points. Hawkish. 2027 dot plot 3.6 versus 3.1% in March, up 50 basis points. Again, hawkish. 2028 medium dot plot 3.4% when in March it was 3.1%, up 30 basis points. Again, hawkish here. Long run rate is expected at 3.1%. That was unchanged. And inflation expectations, now 2026 PCE inflation, 3.6%. It was 2.7 in March. Hawkish, 90 basis points up. 26 core PCE, which excludes energy prices, still at 3.3%, up 60 basis points. Hawkish. This is an incredibly hawkish statement here today on the dot plot and summary of economic projections. Even GDP is expected to decrease. 2026 GDP is expected to go down to 2.2% for June. In terms of forward guidance, look at this. Hawkish for sure. So the dot plot, big story. The median dot plot is now 3.8%. It was 3.4%. So most people are expecting higher rates than we had 3 months ago. The dot distribution tightened higher as well. So almost basically there's agreement on where rates are going to be going. There's basically agreement that we'll have higher rates for longer now in this dot plot update. And so again, we are getting hawkish summary of economic projections here. Again, it's pretty hawkish summary of economic projections realistically. This is a 40 basis point hawkish revision. Markets had been pricing in one to two cuts in 2026. The Fed just told markets no cuts this year, most likely. It's even more hawkish than the consensus expectation of 3.75% for this dot plot update. Compared to March, range was 2.6%, and now it's at 3.6%. So, yeah, basically we're getting much more hawkishness by the Fed baked in. So again, we paused rates today, but just on this dot plot update, everything's reacting negatively. Gold, which fears higher yields, and yields are going to be increasing certainly on this report. Gold is going up. Yeah, so markets are freaking out. They do not like this at all. NASDAQ is all the way down to 30,178 here. 30,178. Yeah, Kevin Warsh speech. Again, 2:30. Yeah, this is kind of a shocking print.
And the reaction's not shocking. I mean, if I remember right, pre-conflict, I don't know about a lot, but there were several economists and people of that nature predicting anywhere from 4 to 6% GDP growth, maybe as high as 7, and now we're down to 2.
Yeah, look at this. The NASDAQ is down to 30,128. Yeah, 2.2. It's not looking good. Again, this is not a good dot plot. It really isn't. And honestly, the statement is pretty small as well. But again, the 2027 medium dot is now 3.6%. It was 3.1%. That is a 50 basis point hawkish revision in the dot plot update and summary of economic projections. And look at markets, guys. Gold dumping. NASDAQ dumping here. Absolutely dumping here. I do think Warsh is going to be a little bit more dovish than people think. But I also think this dot plot update is showing that markets are pricing in higher inflation, and because of that, higher interest rates Core PCE is now expected at 3.3% for this year, was 2.7, 60 basis point upward revision. Next year in 2027, it's now at 2.3%, so that's even up a little bit. 27 core, 2.5% now, was 22%. GDP decreasing 2.2, was 2.4. Next year, GDP 2.3 was 2.3, so that's flat. Again, 2028 GDP 2.2 was 2.1. So basically what we have from this report is stagflation. We have weaker GDP, higher inflation expectations, higher for longer rates, massive revisions on the upside in terms of interest rates. Again, in March, 19 participants submitted projections. Today, only 18, which is Kevin Warsh. He didn't submit a projection for this. It's unusual, but that's probably what's going on. New Squawk preview earlier said Warsh wouldn't publish his own personal dot plot. But yeah, now we're pivoting to the actual FOMC statement, or the actual FOMC press conference at 2:30. But yeah, this is a bad dot plot report. It was not good.
Yeah, so here's the question. Do you think Wash's speech or statement or whatever, will potentially stabilize things, or?
It could. It depends on what he says.
Oh yeah,
yeah, it depends on what he says. It could. If he comes in ultra dovish saying, hey, don't worry about that dot plot, guys. The conflict's going to end soon and, whatever. I don't know. Again, I don't think he's going to do that, though. I think there's going to be a dovish bias in his tone, but I don't necessarily think that it's going to save the market.
Stray from the consensus.
Right. I think, I don't think he's going to stray from the consensus. But again, guys, one of the other interesting things about this very short statement here. Look at this statement. This is a tiny statement relative to what they normally do here. Again, inflation remains elevated, reflecting shocks of increase in oil, basically. Economic activity is expanding. Uncertainty still here because of the Middle East. Productivity growth, capital investment, or strong job gains have kept pace. But yeah, this is a very, very hawkish dot plot update, though. Understandably so. The market reacted negatively. It's starting to bounce back, though, here, chat. So we are starting to come back some from this report. But again, a very, very hawkish dot plot. We could probably expect this because the last one was it wasn't pre-conflict, but the data that they were using was pre-conflict, so to speak. Look at gold. Gold does not like this at all. And let's take a look at yields right now, guys. So here's 10-year treasury yields right now. 10-year treasuries, 4.463%. Look at yields spike. This is 10-year. We should probably look at 2-year. Look at yields jump up on this report. Yields have spiked in 2 years. Well, yeah, look at yields, 2-year yields. They've jumped up, understandably so. This is a much more hawkish dot plot. These are both 2 and 10-year treasury yields. Much more hawkish dot plot than I think a lot of people expected here. What's the Cliff Notes version? The Cliff Notes version is that almost every single inflation outlook, as well as almost every single rate outlook, was higher. Okay, almost every single one. GDP outlook was lower. So basically, we have projections for weaker GDP this year, next year, beyond. We have expectations for higher inflation this year, next year, and beyond. And ultimately, because of those things, we have projections for higher interest rates, noticeably higher than a lot of people expected for this year and next year, right? So that is what the dot plot showed. Basically, higher interest rate potential than expected, much higher than last time revisions in terms of rates. Like, rates are expected to be much higher than they were in March. Inflation is expected to be much more elevated than originally thought for this year and beyond. GDP is expected to be weaker for this year and beyond. So basically, nothing good in that dot plot report. And this is pretty agreed upon. The consensus is there. Like, I don't think Kevin Warsh posted his own personal dot plot, but the consensus is there that rates are going to be higher. NASDAQ's starting to buy this up, though. So we're starting to get bought up here. We're almost rebounding completely back up. But yeah, it's interesting for sure. So 2026 now, federal funds rate is expected at 3.625%. Previous was 3.4. For next year, 3.375. Previous was 3.1. GDP expected at 2.2. Previous was 2.4. Inflation expected higher as well. So we're all getting tired. Yeah. I'm wondering if we're going to have the Fed or the president's speech here. Or the president tweet or something like that. I think if Warsh does not come out even just a little bit dovish, I think president's going to be mad. If he comes out as hawkish, I don't know. I think Warsh is in a tough spot. Like I said, he's entering this with, in the middle of an Iran conflict that has spiked the price of oil. CPI inflation last week, 4.2%, very high. very high. PCE inflation's been high. PPI inflation has been high. Next week we'll get PCE inflation and GDP again. But he's entering a tough time. You know, generally speaking, the president picked him, and so a lot of people were like, hey, well, he's going to be dovish, reduce interest rates. But I don't think he has anywhere close to enough of a green light to do that right now with everything going on. And again, yields are pricing in a hawkish FOMC report. I do kind of want to short this here. Maybe I'll take a short right now. I'm up a lot, so I think I can take a short if I want to right here. But yeah, this is a very hawkish dot plot report. I'm going to take a little short here, just a little one. You know, we'll see what happens. There we go. I mean, we are heading into Warsh, which maybe people expect dovishness here, but was I the only one who called it? I don't know, dude. No, we got a dot plot. Again, the dot plot update. Again, I could show you the dot plot here. Here it is right here. So the dot plot update, let's look at it. The dot plot showed mostly agreement on higher rates, is what it showed. Like, we had a nice narrow cluster at higher rates for this year. So it wasn't super spread out. Some voted for, we're going to end the year, you know, what is this, 3.4%. Most people voted around 3.5 to 3.6%. We had a lot of votes over 4%, though, for rates. We had one vote over 4.5%, roughly. Or not quite 4.5%. So we had one vote almost at 4.5%. But, yeah, the dot plot was not good either. It showed mostly agreement on the higher rates, is what it did. So, again, the median dot was 3.6, 50 basis points hawkish revision, and implied multiple cuts. Yeah. March implied multiple cuts in 2027. Now we're barely looking at any cuts in 2027. So I am down on this trade here, but I'm up a lot, so we can eat it for now. I still am short. I might add more to this. See if we start coming down. There we go. All right, guys, how much time we got? We got 17 minutes. 17 minutes until the FOMC. There we go. I'm going to take just a little piece off here, you know. Maybe another little piece. And now we'll hold it. But, man. Very hawkish report. Basically, we showed higher inflation odds, higher rate odds, by a big amount, by not a small margin. Markets think rates are going to be higher now. We saw higher inflation expectations, weaker GDP expected, and more. So not a good dot plot, guys. Not a good dot plot. The market justifiably reacted negatively, and I think this rebound is a little optimistic here, which is why I jumped in short. I'm going to take a little bit more off right here because our short worked out so well. Like, we got in right here, guys.
Hold up on the yacht?
Yeah, don't buy a yacht yet, Britt. Not today. Maybe tomorrow.
All right.
Maybe in 2028, bro. 2028 might be the year for yachts. I got in almost at the top. You love to see it. I'm shorting this. And I think I'm going to cut it right here and just get out.
I didn't expect for things to be great, but I didn't expect them to be that bad.
Yeah, I mean, again, in March when we made these previous projections that we're looking at, right? The thing to understand about this is that in March when we made these previous projections, we were in a much different situation. Like, yes, we were in the middle of a Iran conflict. Oil was actually higher than it is now back in March when the last FOMC decision is. But the data that they were looking at hadn't been necessarily reflected in it. So we hadn't had 4.2% inflation at that point in time. We hadn't seen high inflation. And you know, we haven't really seen the inflationary aspects of the Iran conflict in the data yet, which is what they have to go by. Specifically, the Fed looks at like core PCE inflation. So we hadn't really seen that in the data in March. And so you got to take these projections in March with a grain of salt. And now we have that data and we're showing high inflation, right? So now we actually have it confirmed. High inflation, not good. Iran conflict still dragging on. Even now we're in the midst of a ceasefire and the Strait of Hormuz has been closed for an extended period of time, right? So now we're seeing the inflation aspects in the data. And that's probably what's influencing this dot plot so much.
That's actually the true effects of the conflict have now been actually documented or mapped
reinforced,
out, or whatever you want to say, and baked in.
Right, reinforced in the data.
Yeah.
Looks like I got out of that short just in time too. But this is the previous closing price of the NASDAQ here. Right, so the NASDAQ is starting to jump up. This is the previous close. We just jumped slightly green on the day. One of the things that is not green right now, though, is gold. Gold has fallen dramatically from this report. It was very green ahead of this report, and it's now at 4,300s. It's red. So gold is not liking this report at all. You know, obviously because of higher yields. I just want to commend you on that short. You nailed the top and bottom of that tiny candle. Thank you, DJ. I appreciate it, my friend. Thank you, brother.
That prediction was right. I'm sorry, that was just funny.
Gold, yeah, gold, bro. I mean, listen, hawkish report. Hawkish dot plot. All right, guys, we have 14 minutes left until this report. 14 minutes.
What's oil doing? I'm assuming it's climbing.
Well, oil might not be reacting at all to this because it doesn't really, yeah, it's not really moving that much at all because it doesn't really influence the price of oil. You know, like we don't really have the price of oil getting influenced by it that much. And so oil it's moving, but not like it, you know.
Yeah.
Hey, thank you for the subscribe. Thank you, brother. Yeah, and we're waiting here. Again, we're waiting for this report. I'm going to get this live now and prepare, but now the big question pivots to, again, what does Warsh say now?
Yeah, that was a silly thing for me to say. I guess the correlation actually works the other way. I didn't really think about it.
Yeah, oil more moves everything else right now in the grand
scheme, as opposed to being moved by it. Yeah.
Correct, yes. Oil moves everything else versus, you know, other things moving oil.
Yeah.
All right, guys, so we got this FOMC meeting right here. Let's prepare for this. I'll try to put some charts up here, but yeah, I'm going to prep for this. Hey, thank you for the subscribe, my friend. Thank you, brother. Hey, thank you for the subscribe, my friend. I appreciate it. All right, I'm going to get rid of this, and I'm going to put two charts up like this next to the FOMC meeting, I think. Let me build this right. I want to see what markets do. There we go. It's pretty good. I'm going to have to zoom in some now. I'm going to make myself really small, hide my P&L, and then maybe put another chart up at the bottom here. All right, guys, here we go. FOMC decision. I'm curious to see what Warsh has got to say here. There we go. I'm sorry, I know y'all can't see this, but I'm trying to get this right. There we go. We got gold. We got oil. I'll probably just put the NASDAQ up, maybe. Hey, thank you for the subscribe, my friend. Thank you, brother. 10 minutes left, 11 minutes until the FOMC press conference. I'm going to move myself to the corner over here as well, so you guys can see everything.
Nobody puts John in the corner.
I put myself in the corner, bro. There we go. All right, that's pretty good. Yeah, I'm going to put gold up in the NASDAQ here. Gold in the NASDAQ. Both of those are not really reacting well to this. I got out of that short just in time, though, dude. Just in time. Yeah, I'll put it up like this. This is fine. All right. 10 minutes. NASDAQ is honestly not down as much as it could be. It was a really bad dot plot report, but the NASDAQ could be weaker here. 10 minutes.
Yeah, somebody up there says market didn't seem to care.
It's getting balled back up. Yeah, look, it's kind of getting balled back up here. Like if we look at the NASDAQ here. The NASDAQ is not really caring too much about this, to be honest. Alright, so the press conference is pretty soon.
I was watching my soap operas and missed the dip. And, well, I mean, hey, man, you know, sometimes...
You try to buy this dip?
Sometimes it's worth it to see, you know, Days of Our Lives or Young and the Restless.
That's right. There we go. All right, here's the NASDAQ right here, guys. We'll see how this ends, but man. Or no, this is gold. We'll put the NASDAQ up. I'm really curious to see what Warsh has got to say. Let me do another poll. I mean, obviously we paused rates today. Jerome voted. Yeah. Again, they're pricing in higher rates.
What if Warsh calls in sick?
He might, bro. What if he could? Go away. I don't want to see this. There we go.
No, he's got to drop that 40, that 40 inflation number.
Well, he didn't do a dot plot, dude. Believe it or not. So he did not do a dot plot. Again, what color will... Real quick, guys. What do we have? We have 8 minutes left. What color will Warsh's tie be today? What color? Yeah, I don't know.
Chartreuse. That's what I'm going with.
I'm going to go with blue. I think blue's probably a pretty good pick here. But who freaking knows? But I'm going to go with blue. Obviously, you can go any way, but... Would y'all rather the gold or the NASDAQ up in the charts? Here, guys. Gold or the NASDAQ?
I'm more interested in gold, personally. But, with the chat.
All right, green, yellow, dark red, blue, American flag, orange. Orange would be chaos. Yellow tie, I don't think that as well. I'm calling red. Bitcoin orange, NASDAQ. We will see, my friends.
Also, if you remember your scrubs, an orange tie evokes aggression and anger.
I believe it does, bro. I definitely think right now that would be the case. What's up, Connor? Thank you for the sub, my friend. Thank you, bro. I definitely think right now an orange tie, just because the correlation with the president and orange and Warsh. If he wore an orange tie, I think shit would hit the fan. I think there would be problems if he wore an orange tie. Personally, I'm gonna go with blue. I think blue's fair. It's kind of in the middle. It's not really red or green. I don't think he's gonna want to wear a red or green tie either. But orange sherbet. Yeah, I think he would get a lot of heat if it was red. But yeah, I don't know, man. I'm gonna maybe black. What an irrational market. Yeah, look at the NASDAQ here, guys. So the NASDAQ is basically teetering between red and green right now. So
it's in purgatory, so to speak, huh? Limbo.
Yeah, basically. Black or gray? Gray might make sense. Yeah, imagine Powell's face on it. Yeah. All right, here we go. We got the FOMC press conference live in 6 minutes. We will stream the entire thing. I'm also going to put the volume up so you guys can actually hear it well on my stream, by the way. So I will put the volume up so you guys can actually hear this thing.
Okay.
You're welcome, guys. You're welcome. We're here for you. Alright, trying to get my stream correlated right. Push this to the side a little bit so you guys can actually see. There we go. Alright. Market funeral if it's black tie? I don't know, dude. I don't think, look, hey, you gotta look at all the different aspects of it. NASDAQ still flushing down here. It's at 30,220. You got to look at all the aspects. Red could be correlated with the right, politically speaking. Blue could be correlated with the left, politically speaking. Orange could be correlated with the president, politically speaking. Green could be correlated with pumping markets. Red could be correlated with pushing markets down. Maybe I'm overthinking this, and I probably am. But because of that, maybe he'll go with black. NASDAQ starting to dip here. Look at this at 30,200s here. Now red on the day. What was a prior green day in markets is now red. The markets have fallen all the way down here today. They have not reacted well to this. NASDAQ is dipping still. Wear no tie? Give me your last minute predictions. We did a poll. We asked people, will Kevin Warsh have a hawkish or dovish tone today? 53% think he's going to be hawkish. 47% think dovish. 53% think a hawkish tone today. 53%. Nobody cares about the tie? I don't know. It's a big talking point, markets, believe it or not. right, let me turn the music off and get ready here. All right, the music is off. We got to be serious now. Again, do me a favor. Hit the like button. Hit the subscribe button. We appreciate it. We cover all this stuff live every day. We cover economics, markets, trading, investing. But, we're chaps. He could go with no tie. But here we go. It's kind of weird in here with it. So quiet. Mandatory dump. Yeah, the NASDAQ did drop here. I saw somebody talk about some stats earlier regarding new Fed chairmen. Most of the time when we get a new Fed chairman, the market drops. I think this press conference is going to mean a lot, though. I think what he's got to say regarding rates is going to mean a lot. But yeah, most of the time when we get a new Fed chairman, the market drops, right? So just understand that, all right? Most of the time. Not always, but most of the time we get drops with each new Fed chairman. So, yeah, we'll see if we get it today, but also I'm gonna have to get rid of the sub notifications while the stream is going on just so we don't interrupt it. 2.5 minutes left now. 2.5 minutes left. Fed paused and we had a hawkish dot plot. The dot plot showed worse data on basically every front. Just to recap this before the Fed meeting. The dot plot showed higher rate expectations, signaling higher inflation fears. Inflation expectations were higher as well for this year and next year and beyond. GDP was expected weaker in the dot plot, and this was mostly agreed on by everybody that voted. So, higher inflation expectations, higher rate expectations, weaker GDP expectations, and this is, again, pretty unified in the Fed right now. Although I don't think Warsh voted on a personal outcome here for the dot plot. I don't think he actually voted here. So, I don't think we actually got a vote from Warsh. But it did show higher bets on higher things. So, hikes coming. Hikes might be coming. They're not right now. Yeah, I'm wondering how long this is going to be as well. He's been very critical of, like, too much information, basically. He's been very critical of too many press conferences, too many Fed speeches, and all this stuff with Warsh, right? So, I'm genuinely curious to see how this press conference plays out. Because, you know, again, Warsh has kind of tried to do things different, apparently, with the Fed. The statement that we got put out at 2 p.m. was very short, not as long as the previous statements, didn't elaborate as much. It was just very short and concise. So if we get mirroring press conference today, it might be shorter. I don't really know. I genuinely don't know here because, again, Warsh has he's been critical of, you know, publicity basically by the Federal Reserve. Where is Bitcoin right now? Bitcoin is at 65. Bitcoin honestly didn't react that much. Neither did the markets. The market's basically flat on the day, but it was a bearish reaction. Bitcoin's still at 65,000 though.
I think most people just like to hear themselves talk too much, and I mean, and
Me,
you know, until he proved. No, I mean, well, yeah, you too, but no, I'm kidding. But no, just in general, and I think, like, you know, I mean, if he proves other, I mean, he says the opposite, and hopefully he'll prove, you know, what he's been saying.
Yeah, real quick though, guys. Britt, I'm gonna have to hang up with you right now because it's about to start.
I know.
All right, bro. I'll call you back after it's done or something.
All right, bye.
All right, bye. All right, I just hung up on Britt. I'm gonna make sure the volume is very loud for you guys. All right, so I'm gonna make sure we have loud volume here to make sure you can actually hear this well. All right, so we're gonna bump the volume up. Let me know how the volume is when it starts. It's about to start right now. I'm gonna mute the volume actually right now so I can actually hear this. Okay, yeah. Turn the volume up all the way, make sure it's good here. And here we go. We're about to start right now. All right, here we go, guys. Volume's going down. Press conference is about to start. Let's wait. Waiting here. The moment of truth. Here he is.
Good day. It's an honor, a true honor to be back at the Federal Reserve and to take up this duty at a time of such consequence. I've been especially heartened by the warm welcome of old friends and new colleagues both. And I've listened closely to my fellow FOMC members, heard a lot of new ideas, new thinking, and genuine interest in moving the Fed forward. This week's FOMC meeting exemplified the very best of the Fed's traditions: rigorous debate, open-mindedness, commitment to mission, responsibility, and accountability for performance. In this business, they all add up to one thing: getting monetary policy right, or as near to it as we can do. That is our North Star. My colleagues and I are here to serve our legislative remit, which you've heard us say before: price stability and maximum employment. And these objectives guided our business in the meeting just concluded. As you saw a few moments ago, the committee decided to maintain the target range for the Fed funds rate at 3.5% to 3.75% in support of the Fed's dual mandate. The committee also reaffirmed its policy of maintaining ample reserves in the banking system. Economic activity is expanding at a solid pace, despite elevated uncertainty that owes in part to the conflict in the Middle East. Productivity growth and capital investment both strong. Job gains have kept pace with the workforce, and the unemployment rate has changed little. We recognize that inflation has been running well ahead of the Fed's long-stated inflation goal of 2%. That's been going on for more than 5 years. Persistently high prices are a burden for the American people. But the recent past need not be prologue. I am pleased to report that members of the FOMC are unambiguous and unanimous. This committee will deliver price stability. At any institution, a change in leadership is a natural and timely opportunity to reaffirm its mission, to review current practices, and to consider whether those practices best meet our objectives. My Fed colleagues and I will be working in close collaboration to ask what changes might improve the conduct of monetary policy. On that score, you might have already noticed something: a difference in today's policy statement. It's a bit shorter, a bit simpler, and it dispenses with some older language. That statement just gives you the facts as best we can judge it. Absent also is so-called forward guidance, which we agreed was not well suited to the current policy conjuncture. This afternoon, you also received the usual summary of economic projections. It's been the practice of this committee for participants to submit these projections, and I have encouraged my colleagues to continue to do so. I, however, have refrained from offering any projections of my own, consistent with my long-held views on the SEP, at least as currently structured. In the median projections, real GDP rises at 2.2% this year, 2.3% next year, and total PC inflation runs at 3.6% this year, 2.3% next year. The unemployment rate stands at about 4.3%. The median participant judges that the appropriate federal funds rate to be at 3.8% at the end of this year and 3.6% at the end of next. Let me turn now to a few words on a key initiative that we're announcing today. I'm appointing a task force in each of 5 areas that are central to the broad conduct of monetary policy. First, Fed communications. Second, the Fed's balance sheet. Third, our use and reliance on existing data sources. Fourth, productivity and jobs in an era of transformation. And last, the Fed's inflation frameworks. These subjects are timely, consequential, and in my view, worthy of a fresh look. My colleagues and I discussed them with energy and purpose over the last couple of days. For each of these independent task forces, I'm enlisting some of the very best minds, both inside and outside the economics profession. They will be supported by subject matter specialists from our superb Fed staff. And they'll have a straightforward charge. Start with first principles. Ask hard questions. Examine current practice. Consider alternatives. And ultimately, propose next steps for policymaker consideration. Since last summer, my colleagues discussed possible improvements in the form and function of Fed communications. This new task force will build on that effort, and I expect propose some well-considered changes, including to the SEP I mentioned a few moments ago. The second task force, the one on balance sheet policy, will review the benefits and risks of the current ample reserves regime and the composition of the Fed's balance sheet. They will assess alternative frameworks for the conduct and operation of monetary policy. The third task force, the one on data, will evaluate new information sources and consider methodological changes to improve data gathering, with the aim of giving policymakers more accurate, relevant, contemporaneous, and perhaps most important, actionable information on the state of our economy. Fourth, the task force on productivity and jobs. It'll survey the pace, the reach, the economic impact of new general purpose technologies, including AI, and explore the implications for the Fed in pursuit of our employment and inflation mandates. The last task force, the one on inflation frameworks, that'll examine the drivers of inflation, first principles, and weigh the full range of ideas for delivering price stability in a changing economy. You'll hear quite a bit more about these task forces and this overall initiative in the coming weeks. Enough for now to make a simple statement. Each task force will serve an objective shared by everyone in the system, shared by everyone around that table that I sat with over the last couple of days. A Federal Reserve that is clear-eyed about its mission, fit for purpose, and focused on the future. And with that, I appreciate your attention. I'm happy to take your questions.
Howard Schneider.
Hi, Chairman Howard Schneider with Reuters. Good to see you again, and welcome back. This is a lot to be putting in motion so fast. What is the timeline you have in mind for each of these?
So I think it'll depend on the task force. It also depends on the urgency in which we need clear answers. My expectation, I'm still in the business of recruiting and finalizing them. My expectation is the task forces will begin work in the next couple of weeks, and we'll start to get some more information from them, some more framing of how they see things starting in the fall, and hopefully most, if not all of them, concluding by year end.
And just specifically on the inflation framework, you talk about first principles. Does this include a review of the 2% target itself? You've mentioned that things to the right of the decimal point don't matter. Should this be starting from a premise that 2% as a point estimate is too strict?
Let me break that into two pieces. First, on the inflation framework review, their remit is, what are the drivers of inflation? What's the Fed's responsibility for inflation? In part, how do we measure inflation? But that'll overlap with my data group. On the 2% inflation objective, that is the Federal Reserve's long-held objective of 2%. You've heard me say before, I tend to focus on the left of the decimal point. Well, the 2 is the left of the decimal point. For now, 0 is to the right. I see no reason until we have reestablished our commitment and ability to deliver on the 2% inflation objective to revisit that. So that'll be outside the scope of what we're taking on.
Colby.
Thank you so much. Colby Smith with the New York Times. You've in the past said that inflation is a choice, and in the policy statement, it includes this pledge to deliver price stability, as you've reiterated today. But looking at the SEP, the bulk of your colleagues expect core PCE to run around 3.3% by year end, and for the 2% inflation target not to be reached until 2028. So I'm curious how patient you think the Fed can afford to be at this juncture in terms of waiting for one-time inflation waves to wash through and for underlying inflation to step down after so many years of inflation running above target, and under what circumstances you would support the Fed taking some action and raising rates.
Sure. So quite a bit there. Let me try to break that into pieces. First, we have the capability and commitment to deliver on our price stability objective of 2%. That's exactly what we're going to do. In the Fed's review of its strategy over the last any number of years, in January, the Fed, including the strategy that we're still bound by, the Fed statement says that inflation is primarily determined by monetary policy. You bet it is. I've said for years inflation is a choice. You bet it is. And today I'm announcing that this committee unambiguously and unanimously have decided we are going to deliver on that. The rest of your questions sounded like an encouragement for me to give forward guidance. We've dropped forward guidance. Some along the committee, I think, dropped it, I suspect, from our discussion the last couple of days, because they said at this moment in time, it doesn't feel as though providing forward guidance is right. Others have, I'd say, different views and think as a general proposition, forward guidance isn't the business we should be in. But that'll be taken up by the Task Force on Communications and my policymaker colleagues. We're going to listen hard to what the experts say and make our own decision. But I can't give any forward guidance about what we're going to do next. The good news is we'll be meeting in 6 weeks.
So just following up, I guess, on the current policy settings, then I am curious how restrictive you think things are at the current moment, given the flow of data that we've seen and, forecasts that are coming down the pipeline.
Yeah, I've heard characterizations both inside and the Fed about that. I'll give you my own. It's uneven. If I look at the housing markets as one example, Fed policy isn't the single determinant of the state of the housing market. But broadly, I would say Fed policy appears to be somewhat restrictive. I would have a hard time managing to say those words if I were to see what's happening in financial markets. So I'd say it's uneven. That's perhaps a function of different transmission mechanisms of monetary policy, whether monetary policy is coming from our interest rate tool or our balance sheet tool. But the good news, we have a task force on that too, and the balance sheet task force will be looking more at that subject.
You've said you don't like forward guidance. You dropped it from the statement this time. But with the dot plot, 9 members suggested that they want a rate increase by the end of the year. And the markets have taken that as forward guidance. So what does this mean in terms of how you guide the markets and in terms of what the dot plot's future is?
I'm going to have to give you the same answer I gave to Ms. Smith. We've got a task force for that. I'll give you a little bit more. I reviewed the dot plots, and when I saw the submissions, I noted that all the submissions were coming in with pencils, those kind with the big erasers. That's to say that I think my colleagues around the table, when they submitted their dots, understand the world is changing quite quickly. And they didn't feel bound by them 6 weeks from now or 6 days from now in the event that their circumstances change. I'll note a couple other things. What I heard around the table was, as they submitted their modal forecasts, to be clear, weren't, this was more likely than not. This was more likely than their other scenarios. So I didn't hear tons of conviction. What I heard was the kind of humility that I think we should have. I did not submit a dot. For me, it's not helpful in the conduct of policy. I suspect by year end, as I mentioned in my opening statements, there'll be a review about communications broadly, press conferences, dots, meetings and the like, transcripts, minutes. This will be part of that. I don't want to prejudge the outcomes there, but I'm pretty open-minded about what they could be. And I was just incredibly impressed over the last couple of days. My colleagues over the last 2 days, and frankly, over the first 3 weeks I've been here, they've been very open about changes. Change isn't easy, change is filled with risk, but our number one goal is to get monetary policy right. The way to get monetary policy right is to deliver on the remit that Congress gave us, to deliver on price stability, and there was no disagreement on any of those points.
At the risk of possibly getting the same answer about task forces. Communications, what is your feeling about these news conferences? Are you going to continue one after every meeting? Do you find them useful? What is the future for the way Kevin Warsh will communicate?
Well, this one's probably got another 15 or 20 minutes in it, so I don't want to prejudge the outcome. Press conferences can be a very useful way to communicate with households, businesses, and more broadly through using the likes of you. I had a great old mentor named George Schultz, and his mantra was press conferences are useful, but when you have one, you want to make sure you have something important to say. Today, I think we had something important to say about our commitment to deliver on price stability, our commitment to rethink practices with an eye of moving the Fed forward, and to give you and the American people a sense that these aren't idle thoughts, these are concrete thoughts, that we're going to seek out the best minds, both the best thinking inside of the Federal Reserve and the best people I know in business and economics and the academy and technology and the rest, to share their views. That's what we're going to be doing here, the pursuit of truth. I think we're going to come up with some new and interesting things. We made some changes today. I expect more changes to come. And some of those might well be worthy of a press conference.
Chris Rugaber.
Hi, Chris Rugaber at Associated Press. Thanks for taking our questions. Could you give us a sense of how you see inflation more in the long term? I know you may not want to comment on the ups and downs, but is this mainly driven by energy prices in the Iran war at this point, or do you have any concerns about underlying inflation pressures in the economy? Thank you.
So I can't do much better than the committee just did, so let me restate it. Inflation remains elevated relative to the committee's 2% goal, in part reflecting supply shocks that have driven price increases in certain sectors, including energy. The paragraph goes on to say, but to be clear, the Fed will deliver price stability. My own judgment is the committee spent quite a bit of time, not just in 2 days, but over iterations of a couple of weeks. That's what we're prepared to say about inflation, but the commitment to deliver is strong, unanimous, and unambiguous. And that's, I think, an important message. We've missed for 5 years, and we're going to fix that.
Well, great. And then just on the data task force and everything else, I mean, generally speaking, I think people feel the Fed looks at everything already. Certainly that was the sense from before. Is there data that you feel is not given enough weight? I mean, you mentioned the trimmed mean in the past, but again, that's well known to certainly most Fed members. So what is that task force looking at, and what might be I mean, I know you don't want to prejudge the outcome, but are there examples of data that you expect might be given more weight? Thank you.
So you're answering my question. So let me say I don't want to prejudge the outcome. I also don't want to say too much about what they're going to do because I still have a phone call or two to make before I've nailed down the people that are doing that. I'm interested in what the outside experts' view is on the subject. I'll say this generally. Most of the data that central bankers and other government officials in the United States consume come with old-fashioned survey methods, a national accounts of what the U.S. economy looks like that looks very little like the U.S. economy in 2026. Survey methods that don't have response rates that we need, asking questions that might have been quite applicable a generation ago that are less applicable now. So even inside of official statistics, I would be open-minded if the task force and our own best thinking had recommendations how those official statistics can be brought up to a standard of our time using new analytic methods. I'd also say this, almost every private company CEO that's running his or her business are doing so with real-time information that isn't subject to much revision, that is telling them what just happened at that very moment. As you know, there are normal, long and variable lags in the conduct of monetary policy. What we're really interested in is what's happening right now. What we're less interested in is echoes of history. And you're hearing from my answer that some of the data that we receive, that we're waiting on, the first Friday after the month, the payroll index or something else, that might be an echo of history that's quite useful on its third revision. We need to take those error bounds down because we have to make hard decisions in real time, I'm really open-minded that there is a lot of new data sources that we can learn from the private sector, from reforms in the official sector, and new analytic techniques that are far more refined than asking a simple question about whether something was core or non-core.
Edward.
Thanks. Welcome, Mr. Chairman. Edward Lawrence with Fox Business. So if you don't give a lot of ongoing forward guidance, won't the markets have more volatility, and shouldn't Americans have more access into what you're thinking going forward?
So I think financial markets perform best when they react to incoming data. I think the financial markets work less efficiently when they ask a question, how will the Federal Reserve react to that incoming information? The more that markets are paying attention to what's happening in the real economy, deciding what's good data and what's less good data, the more financial markets can price what they believe is the most likely and what are the tail risks. Financial market prices are probably the most important source of information to guide central bankers. But when all the financial markets are doing is reflecting back what we've said, then we're taking the most important source of information and we're being blind to it. I'd like us to create a system where those blinders come off, where markets are following data that they efficiently think is reliable, and they'll be watching data, we'll be watching data, they'll come with better information through market prices to us. We can make more informed decisions with ultimately the goal that I said at the outset, deliver on the price stability objective that Congress told us to do and that we've got to get in the business of doing.
Yeah, if I could take you in the meeting a little bit. This is your first meeting. The board members seem fairly hawkish when you listen to, in general, when you listen to what they're saying. Was there any discussion of a rate cut going forward today?
There was one proposal on the table. There was no discussion of any other proposals. The discussion on that proposal, I would say, was quite limited. The group was unanimous and unambiguous on it. It has been the practice of this central bank and others to have a range of alternatives. Today we had one. I thought it furthered the discussion, deepened it, and made it clear what we needed to do and how we needed to deliver. I wouldn't prejudge what happens in the future, but there was only one big subject for us. We took it on. We had a good family fight on it for a couple of days, and we ended up, I think, in a better place.
Claire.
Thanks a lot, Claire Jones, Financial Times. Coming to this blind, reading this very nice short statement that I think we've all appreciated in the room, one might wonder why you didn't raise rates today, considering what you're saying here about the risks to US inflation and your mandate. I guess, why not, and what would you need to see in order to get to that place? And secondly, on your task forces, are there any best practices at other central banks that you'd consider looking at? Thank you.
Yeah. I'm glad they're in the practice of giving you two questions, because my answer to your first question was going to be very curt. I've got nothing more to say than the statement itself. And to the point of the question I got before, market reactions to what we say unfiltered, I think, is more helpful than having delivered a statement, me then improvising further upon it. Best practices of task forces. This is a subject I've thought some about. I've been on a task force or two in my life. Best practice, find the best minds. Ensure that the task forces have a range of people, both by backgrounds and predispositions, so they too can have a bit of a family fight. Make sure when you establish a task force that the group that's going to be the recipient of the information feels as though they've got some equities in it too. That's why we're looking for, haven't done the final roll call, some of the most significant talent we have in the building and across the reserve banks on each of these, and in some sense seconding them to this group for a period of some number of months, so that the leaders of the task force know what the most analytical central bank in the world thinks about that. They can reflect on it. And a final best practice, we're not outsourcing decisions to anybody. administrations past and present, reserve banks have chosen a group of 19 people around the table. These will be our decisions. We can agree to some of the recommendations, disagree with others, have a good family fight about it. But what comes from them will, I hope and believe, make the discussion we have internally better, stronger, more of a dialectic, so that we can finally deliver on that price stability objective.
Just a quick follow-up on your markets point. If you look at 2-year yields, they're really suggesting that markets think more tightening is needed. Would that be your read on what the 2-year yield is saying as well?
We were in such a good place. This is why we don't do third questions, I presume. I'm not going to offer any commentary on market reaction over the last 30 or 60 minutes. What we've given markets is a new chapter for the central bank, some fresh thinking. What we've given markets and households and businesses, I think, is a commitment to ask ourselves hard questions such that we can deliver on the promises that we've made before. This is a lot of change for financial markets to digest. I wouldn't be particularly intrigued by how they react in the first several minutes or even first several days. What I think is most important is that financial markets, and at least as important, households and businesses know that this central bank will deliver on price stability.
Brian.
Hi there, Chairman Warsh. Brian Chung with NBC News. Thank you for taking our questions. So when you say that we've dropped forward guidance for the layperson, that might sound like the Fed's going to say less or offer less insight into where their borrowing costs might go. So for the person that maybe you might run into at the grocery store, where the price tags are rising at a faster pace than their wages at the moment, how would you explain it to them? I don't know if task force might be the answer there, but how would you kind of communicate this era, this chapter of the Fed?
If I told somebody in the milk aisle that I had a task force for that, I think that would be doing a very poor job, so I appreciate it. If I saw somebody in the grocery store, what I would say to them is that we cannot have a very significant effect on particular prices. The price of oil in the markets today, or even the price of a dozen eggs, that does not have first-order consequences to what we're doing. But we do have a really important job there, and it's to make sure that those changes in oil or beef or eggs or milk don't broaden in the economy, don't have second and third-order effects. That's our job, that's our commitment, that's our capability, and we're going to deliver on it.
And then is the Fed's relationship with the Treasury also under review? There was the normal breakfast meetings with the Treasury Secretary. Is that something you intend to continue doing? And have you had conversations with the President since you're swearing in?
So on the President, I don't have anything for you. With respect to the Treasury Secretary, he has been posting pictures of our breakfast, so I don't think I can deny that. The long tradition at the central bank is that the Fed chairman and the Treasury Secretary meet weekly. I think we've pulled off 3 of those so far. I believe he's overseas this week, so this will be the exception to the rule. I think they're very useful discussions. The central bank's objectives and our roles and responsibilities are quite delineated from the fiscal authorities. And in my view, monetary policy is independent in the conduct of what we do. But that doesn't mean we're not interested in what's happening with the fiscal authorities. The way I think about it is this central bank needs to have a wide lens, but a narrow remit. We need to be quite interested in what's happening in the world. I won't be breaking any news here to suggest I'm quite interested in what's happening in the Middle East. That does have some effect on our day job. It doesn't mean it's our responsibility, but I think we're going to keep a wide lens, and my meetings with Secretary Besson to this point have helped widen that aperture. So we're aware of things that could affect our day job, even if it isn't.
Steve.
Steve Leisman, CNBC. Mr. Chair, thank you, Mr. Chairman. Thank you for taking my question. You had said in the before you became chairman that you thought productivity was a reason why the Federal Reserve could lower interest rates. Do you still believe that to be the case?
So the committee had a discussion of productivity today. AI came up. The way I thought about it before and socialized with the group is that artificial intelligence, the latest generation of general purpose technology, is perhaps as important a change in the economy and business and households that we've had in my adult lifetime. It is filled with both a huge opportunity and with risks. I take both of those very seriously. You may have heard me say before that AI is shorthand perhaps for American ingenuity. That doesn't mean that it's going to be easy. That certainly doesn't mean it's not going to be disruptive. But over the long term, my conviction, and I heard quite a bit of support for this around the committee today, is the United States is a winner as we go down this. The United States is ultimately going to be better off in that. Now, to bring that back to the conduct of policy, timing, scale, speed, implications for output and employment, it's one of the things we have a task force to do.
If you don't mind, a follow-up from the other side, which is that when you look at the strong job growth that's out there, the elevated inflation, GDP seems to be going pretty good, and the stock market seems to be soaring. Do you look around this economy and see the funds rate being restrictive?
So that's your second question. I'm going to give the same answer that I gave before. I'd say as I think about the conduct of policy, what matters is what's the effect of policy. Not what do we say, but what happens. And the best way I can describe it is it's uneven. I do see some restrictiveness in things like housing. It's hard to use those same words anywhere else. I'll just make one other point. You talked about one of our dual mandates on the employment side. I don't believe that we have a cruel choice. I don't share the view that was expressed a few generations ago that Federal Reserve chairmen show up at a podium like this and say, you got to choose. And you're going to have to decide whether you're willing to tolerate higher inflation to put more people at work. I don't believe in that. What I believe is if we do our job, we can make strong growth, low prices, and strong employment mutually compatible. And so what you heard from the committee today is we've got some work to do on the price stability front.
Nick.
Thank you. Nick Timmeros with Wall Street Journal. Chairman Warsh, you've said repeatedly credibility is earned by delivering. If credibility requires delivering, the move would be to tighten or at least to threaten to. Now, you didn't do that today. Why not?
That judgment you expressed was not expressed by any of the 19 people around the table. We'll be meeting in 6 weeks. We'll take up the issue again.
And if I could ask about AI, the build-out is generating enormous demand right now, CapEx, data centers, power. The productivity payoff may be further out. So in your judgment today, is AI adding more to demand or to supply?
It's a good question. At the central bank in an economics profession, what we spend most of our time doing is counting demand. It's easier. We can see it, we can count it, we can check it, we can revise it. What we do, though, is we infer supply. You'll notice in the second paragraph of what one of your colleagues described as a very short statement, we have a sentence on the demand side and a sentence about the same length on the supply side. They're both important. Just because we can count one better than the other doesn't mean we're going to favor one more than the other. With respect to AI and the growth of data centers and infrastructure around it, we're counting the demand side, and it is no doubt showing up in GDP figures. We can be less certain when we infer the timing and extent of the growth in the supply side. It may well be an intuition the supply side is going to expand, but it'll take longer. I just describe it this way. There's a race between supply and demand. Milton Friedman says that the only thing we know about economics is that there's a supply line and a demand line they ultimately cross. When they cross and what are the implications for policy? The good news for you is we have a task force for that.
Andrew.
Thanks, Mr. Chairman. It sounded like on the task force on data that you were looking at overhauling or completely overhauling the system of national accounts, the way the government mines the economy. Is that your ambition?
In a word, no. In a few words, much of this data gathering happens in other government agencies to which we owe a tremendous amount of respect, tremendous amount of deference. But if in the course of this we come up with recommendations, which Fed staff have already begun to develop, about things that they could be doing to help inform us as policymakers, we're not going to hesitate. Again, I don't want to try to delineate the four corners of the research of the task force on data, but I do think there will be a review of official statistics, and at least as important, a view of bringing the best practices from the private sector and new analytical tools made possible by AI so we can forge these into a fabric that gives us better real-time information. So as I mentioned before, when we're making decisions that we'd say are real contemporaneous data, not data that we call contemporaneous, that's really an echo of history.
Okay. Thanks. The other question I wanted to ask is related to the building renovations. Are you considering any changes to the renovations, the projects, just in light of the fact that they became kind of a political football in the last year?
I heard something about that. I don't think I'm breaking any news, but my view, when you show up at a new institution, you should go meet with the Inspector General, just as a matter of good practice. It's a practice that I hope to continue. I've had one meeting with the Inspector General, and he told me what I believe the world knows, which he'll be coming out with a report on the building and the building projects at some point later this summer. And I'll be interested in reading the report. From my perspective, with a forward-looking glance, is there anything that we can be doing or should be doing from this moment until the completion of the project to do what we can to be good stewards of taxpayer money and make sure that we're delivering on the promises that we made? Some more work to do. You might not be surprised in the first few weeks. I've been somewhat preoccupied on other matters, but I promised to get to the full breadth of the Fed's tasks in the weeks ahead.
Victoria.
Hi, Victoria Guida with Politico. So I know that you did not submit a forecast, but you are the person who is authorized to speak on behalf of the FOMC. So I'm wondering if you could tell us in the SCP, the increase in the expectations for inflation, is that all because of the Iran war? What was the discussion around what the expectations for inflation being higher and also potentially growth being slower? So
my read of what I heard in the room reflected, I must admit, in the SEPs, is half of my colleagues thought the policy rate, given all those developments, should be at this level or lower between now and year end, and the other half thought higher. That 19th voter was me, and I didn't submit one. There's a range of views on the questions of first and second round effects, no resolution or conviction, but we'll be meeting again in 6 weeks. I think we're going to know more then, and I think that my colleagues are very attentive to incoming developments between now and then.
And can I just quick follow up on the SCP? You said that you're still encouraging your fellow committee members to submit forecasts even if you're not doing it. So what do you think is the benefit of them doing it even if you don't?
That's the commitment that the FOMC made, and it's a commitment that I hope we live up to. Commitment we made was to deliver price stability. I expect us to live up to it. By the time we get to the end of this year, as I mentioned, I wouldn't be surprised if there was a new communications framework. There were some changes to the SEP. That's a committee discussion, a robust discussion. I think we'll have it. I believe we're going to come to a better mix of communications to deliver on what we promised, but I wouldn't want to prejudge what those are. But between now and then, I would continue to expect colleagues to submit their SEPs. Some of them, I think, believe that the practice is currently structured is okay, but I heard a lot of interest in real reform, generally about all these topics. You didn't ask it, but I'll answer. It was a pretty gracious couple of days, and it's been a pretty warm few weeks. The institution wants to figure out how we can do better. The institution's going back to first principles, and I'm encouraged that what we've done in the statement, what we're thinking about doing with respect to the SEP, that instinct towards a new chapter is a real one, and by the end of the year, I hope we can put some points on the board, both in form and in substance of delivering.
Go to Enda for the last question.
Politico and Bloomberg News. Could you guide us through, please, some of the principles that guide your own reaction function, and tell us a little bit about the kind of conditions that you think when the Fed should respond?
It's going to be a very unsatisfactory answer to the final question. The Federal Reserve has a lot of responsibilities, not just in monetary policy, but in supervision and regulation, consumer affairs, and payments. My own view is our credibility comes from delivering on what we're saying we're going to do across everything we do. I've devoted more time in my first 3 weeks to monetary policy than all those things. But the more we deliver on our promises as good supervisors and good regulators, the more benefit we get, the more credibility enhancement we have in monetary policy. When we deliver on our price stability objectives, which we will, the American people will feel as though the hardships that they've been living through, in part because of inflation in the last 5 years, are in the rearview mirror, and that credibility will have dividends across what we do, and the institution will come to press conferences like this, always with an impetus to reform, always with an impetus to do better, but we're going to put some points on the board.
And Mr. Chairman, we've had strong labour data in recent months. How would you sum up the labour market right now? Do you see it as stable and as potentially a source of inflation? Thank you.
Yeah, so the committee, if I were to try to capture how the committee thought about it, the committee thought that the labor markets were stable. There were some people around the committee who thought that it was trending better than that. Trends matter more than data points. What's happening over 3 or 6 months matters more than any one data point, any one data release. And I'd say the jobs data has been moving in a good direction. If I heard one other thing around that subject over the course of the last couple of days, what I heard was that strong productivity-led growth is not something that we fear, but something we embrace. Thank you all very much.
Okay, guys, so that is it. That is the meeting today. Look at the NASDAQ here, guys. So let's take a look at markets. Markets, number one, what did you guys think? Honestly, I just want to say we've had some really funny comments that had me cracking up during the stream. I said I was going to start a task force for getting snacks at my house. The chat immediately labeled it Snack Force. They said we're going to have ring pop rings. Yeah, y'all are funny, bro. Y'all are funny. But yeah, markets are net down from this report. Let's take a look. I don't know how I feel. I'm okay with the task force around data, to be honest. Like, I know this might be kind of a thing, but honestly, if we can get the data to be more accurate, I support that. Realistically, I think the market has been kind of swingy, especially in terms of data here. Like, we've had a lot of back and forth data releases where they put data out and then they revise it by big numbers, and then, you know, they put more data out and they revise it by big numbers. And so if we can get that data more accurate, I honestly genuinely support that. One of the things that's not reacting well, look at the NASDAQ starting to run here. So the NASDAQ did start to go green. Look at gold right now, guys. So gold is dumping down on higher yields. So yields have spiked from mostly the summary of economic projections, to be honest, but from a lot of different stuff here. He seemed pretty data dependent and neutral. He refused to give forward guidance. I told you guys he would probably be like that this morning, in which, like, he's not going to give forward guidance. I just didn't think he was going to come out swinging in terms of giving out expectations here. I assumed he was going to be pretty neutral. And that's kind of what we got. Now, he does seem to do things a little bit differently. I think we'll get, one of the things that we'll see is we'll see less less publicity for Fed decisions now moving forward. I think it looks like he's not going to be giving any dot plot updates or summary of economic projections personally. We're still going to get one, but it doesn't look like he's going to give one moving forward. But gold breaking down on the yields. Yeah, gold is now falling down. Yeah. MU is flying. Yeah, yields are spiking on this report. Right. So, but I think he was pretty neutral. I don't think he really stuck to any side. Basically, he's saying he's not going to answer anything. If we look at 2-year yields right now, so we can take a look at 2-year yields, they are up dramatically. I think a lot of this is from the summary of economic projections being so much higher for rates than expected, mostly agreed upon too by the Fed voters. But they've spiked some since the actual press conference as well, and you can see the correlating gold movement down, right? So gold does not like higher yields or higher rates. Why? Because when bonds are paying out more people buy gold, more people buy bonds and not gold. The dollar also strengthens on higher yields because in order to buy those bonds, you have to use the U.S. dollar. And so the dollar's probably ripping up. Yeah, that dollar's popping up to over 100. The NASDAQ is kind of flat on the day, though. It's a little bit flat on the day. The dollar index, yeah, I'm sure is ripping up. Yeah, he didn't really give a lot of answers, honestly. He genuinely did not give a lot of answers today. So he was even more data dependent and neutral than I expected him to be. But yeah, we'll see what happens, guys. He refused to basically give out any type of projections. And yeah, I'm curious to see where this heads. I'm genuinely curious. Who knows? Who knows? But look at the NASDAQ. NASDAQ is going back flat. The dollar index is strong. One of the big losers from this report is gold, right? Gold down to 4270s here. 4270s for gold. So definitely a little bit of a struggle here for gold. I've honestly gotten some good trades today. I got into some good trades. We shorted originally, and then we longed somewhere in the middle of the Fed meeting. A lot of words without much content. Yeah, he didn't really give any guidance. Most of the questions, I think people are used to asking Powell around forward guidance, right? Like, I think markets are pretty used to asking Powell about forward expectations. Powell, a lot of the time, wouldn't give too clear of answers either. But, you know, he said his ambition is not to overhaul systems of national accounts. His read of what he heard in the room was half felt rates should be lower and half should be higher. So basically neutral. The president is speaking right now, though. He says, all right, that they held rates, whatever, on Fed raising rates, possibly said it could happen. On the Iran deal, he said it would probably be 48 hours, sometime within the next 48 hours it would get signed. Iran signing in final form, but not yet determined, will leave U.S. military in the Gulf for a while, he says. FOMC made a commitment to deliver projections. According to Warsh, expects to live up to that by the end of the year. Would not be surprised if there's a new communication framework and changes to the SEP. One of the things I did hear Warsh say, though, when asked about inflation, is that they're going to make that a priority. So that sounds like higher rates. It also could be quantitative tightening, and he did say they were going to do a lot with the balance sheet. So we could get QT and maybe rate cuts. But yeah, that's kind of stuff that we've had going on in this meeting. So is bearish or what? Markets have it depends on what we're looking at. The NASDAQ, like, look, here's the NQ right here. Here's the S&P, actually. We'll look at the S&P. The S&P originally went down on the summary of economic projections. So here's the summary of economic projections release right here. So the S&P immediately dropped, filled the whole gap. By the time 230 hit, it was about right here, right? Then reacted negatively to the FOMC press conference. And so markets are reacting bearish, but this is what normally happens in these moments. The NASDAQ is also currently falling down here as well. But again, I appreciate everybody that we asked people, Warsh or Powell or John at Beginner Trading. 17% said John at Beginner Trading. Shout out to you guys. I appreciate that. Tomorrow we do get jobless claims. So we do have jobless claims going out tomorrow. And yeah, markets are reacting negatively right now, though. Look at the NASDAQ go down. Look at the S&P 500 go down. He did talk about AI, said it's an important change in the economy filled with opportunity and risk. Does not believe the Fed has a cruel choice between full employment and stable prices. Have to work to do that on price stability. Says none of the 19 members at the table felt a need to tighten today. So nobody voted for rate hikes. He didn't comment on yields. He didn't comment on market reactions. He didn't comment on the president here. And I don't think he said inflation anywhere near 40 times, but I'll have to go back and look. He thinks colleagues understand regarding the dot plot. The world is changing quickly. Do not feel bound by their dots. When asked about how restrictive policy is, he said it is uneven, perhaps due to a different transmission mechanism. Policy appears restrictive from the housing market, but not financial markets, is what he said. Has capability and commitment to deliver price stability and 2% inflation goal. He thought the labor market was stable. Some thought it was trending better than that. Trends matter more than dot plots, he said. So they're data points. So interesting nonetheless here. So how you guys doing? Let me call Britt. Let me see if Britt's here. NASDAQ's dropping. Let's call him. Oh, I don't want to do that. Hold on. All right, guys. So look at gold and look at the S&P start to break down. So the S&P is dropping. Hey. What's up, Britt? All right. Look at the S&P drop. Look at the NASDAQ drop. Hey, what's up? Look at the NASDAQ dip here, guys. Wow. So the NASDAQ is now reacting negatively to this. This is a 5-minute chart, too. It's dropping. What's up, Britt? You there?
Yeah, I'm here. Can you hear me?
Yeah. Markets are going down right now, guys. Look at this drop in markets. Look at steep right now in markets. Gold getting hit. It looked bearish. The head and shoulder, I told you guys like a couple minutes ago, there's a head and shoulders on a short-term chart. Head, shoulders, head, shoulders, head, shoulders. So head and shoulders on a short-term chart, and NASDAQ is now going red on the day. $30,000 is right here. So I think 30K is the level you should pay attention to in the NASDAQ right now. 30,000 is right here. But yeah, markets are looking bearish right now after this report. Gold has basically not stopped going down over the last like 45 minutes. So gold, if you look at it above me right here, gold is consistently falling. I'm assuming Bitcoin is down, right? Yeah, Bitcoin under 65K. If we look at BTC, it's now under 65K. And falling here. What did you think, Britt? Sorry, I kind of cut you off.
No, it's okay. I mean, not shocked that he kept it short, and I don't think he. I saw a lot of people using the term word salad. I don't agree with that. I felt like he kept his answers pretty short and succinct, and had to answer the same question multiple times. But overall, I don't know. Overall, I guess I felt pretty good about the forecast. I mean, at least they're trying to adopt some new techniques and look at things in new ways going forward to adapt to the way things are changing.
Yeah, for sure. I do think like there's some. I want to try to phrase this delicately though. I do think there's some. What's the word? Not discrepancies, but there's some contradiction. You know, because basically he said we're going to be telling each other less. Basically, he's going to give less forward guidance. But he's also saying he's going to be more proactive. But then he's also saying he's going to start a task force to make the data more accurate. I do agree that the data being more accurate is important because you guys know me. A lot of you guys watch me for data here. We cover economic reports every day that they drop. Any big report, we cover it. Even the small reports we cover. But specifically in the BLS labor reports, we've seen a lot of revisions, a lot of big swings on both sides. It's just been hard to gauge any type of read from those job reports. Now, to be fair, some of this was from, you know, the shutdowns that we had last year and this year, and other things, right? But I'm okay with making sure the data is accurate, as long as it's not meant to skew a bias in one way or another, which I think is possible, right? As long as it's not meant to skew a bias in one way or another, I'm okay with making sure the data is accurate, if that's what they're actually doing, which is a big if. So we'll see what happens. Yeah, they've had to revise data so much, like, I'm okay with it. If they do get a task force again, they're fixing the data, because we've just seen so many big swings. Like, even if I pull up the jobs reports, right? Like, look at the NFP jobs report graph. Right, this is from Trading Economics. But, like, look at the swings here. Now, oh, crap, I just exited out of it. Yeah, look at the swings here. So, like, it's been hard to gauge a real read from jobs lately. Like, look at this. So, what's the time frame? Let me look at a max chart. Let me look at a 10-year chart. No, 5 years.
I'm also willing to wait for a couple meetings and let the guy get his feet on the ground.
Yeah, for sure. It's his first meeting. He does do things different than Powell. I've covered every major Powell report. But look, strong jobs, weak jobs, strong jobs, weak jobs, strong jobs, weak jobs, strong jobs, weak jobs, strong jobs, weak jobs. So it's been a situation where it's been hard to gauge where the labor market actually is, because we've had so many swinging moves in the labor data. Now, again, some of it could be just from, like, some of it could just be from the shutdown skewing things, and that's plausible. But I'm okay with making sure the data is accurate. What do you guys think? Did you guys think this report was bullish or bearish here? Bullish or bearish report? What do you guys think? Yeah, I think it's a tough meeting for him, because he's coming in the middle of an Iran conflict, and he's coming in with oil high, CPI inflation 4.2%. And so honestly, what I think we might see is quantitative tightening instead of rate hikes. I think we could see something like that. I could see, again, there's been rumors of a balanced approach where we do QT and also lower interest rates, right? So we'll see if we end up doing that. He did mention, like I said, the balance sheet in the Fed a couple times and said that they were going to do things there. So we'll see what happens on that front. But yeah, Bull or Bear, let me know in chat right now. Bull or Bear, put Bull or Bear in chat.
I don't know what, I mean, as far as the things that he was saying, his talking points, I don't know what it actually means for the market, but overall, I mean, at least he, on a personal level, seemed optimistic to me, or at least reasonably optimistic. Not over the moon, but by no means negative.
Yeah, for sure. But I think his bias is also rate cuts as well, though. So like he's going, I think the dot plot was bad, right? I think the dot plot, but I think it's going to be bad because, like I said before, the dot plot we got last time was from March. That was right when the conflict started. We hadn't really had any reinforced data points to show the high inflation that we had. And so this is the first dot plot since then, and we actually do have the data points now, CPI 4.2% and all that stuff. And so, the natural outcome of that is going to be higher expectations for rates because of so much higher inflation. But it's an interesting, we'll see what happens. Depends on the Iran outcome. Yeah, it depends on how quickly it resolves for sure. So I asked the chat, Bull or Bear. Let's see what we got here. We got Bear. Silver says Bear. Josh says Bear. Saint says Bull. Supervillain says Bull. New poll. Feed the YouTube algo. I'm not going to do a new poll. I'm just going to leave this one up. Negative. Bearish. Depends on the Iran outcome. He's a billionaire. Hard to not be positive. He would sidestepping. I love shorting Bitcoin and XRP. President saving the day, Bull, Bear. She's probably still trying to figure all this out. A lot of the Fed chair has a tough job. Yeah, it's a tough job. The Fed chairman job makes what, $200,000 a year? Now there's benefits. Like I said, sign me up. I'll do it right now for free. I'll do it for cans of soda right now. Sign me up. But yeah, it's still a tough job. A lot of public scrutiny. If the economy goes to shambles, they blame you. If the economy doesn't go to shambles, they isolate inflation and they say, look at how bad inflation is. And so it's a tough job, genuinely a tough job. Nobody's ever really happy if the economy's thriving. Generally, we got inflation stuff to worry about. If the economy is in the can, generally people are going to focus on that and say, look what you're doing. So tough job. Bull. Let's be honest with ourselves. Bearish, but massive buying opportunity once it settles. Yeah, I don't necessarily disagree with that. It was politically correct, but sparks uncertainty. Sure, we didn't really get many answers from him. And so that's why a lot of people were saying word salad is because, I mean, to be fair, he set the standard in the first, 10 minutes of the questions, right? Like, people kept asking him about forward guidance, and he kept saying, no, I'm not giving it to you. And then they kind of kept asking him about it. To be fair, I try to be objective, right? To be fair, I saw a little bit of that. I don't think it's necessarily his fault that he kept getting asked about outlook, but I also think it's also like a big change in the standard of the Federal Reserve, where mostly if we're not getting answers on outlook, what are the questions for? What are they going to ask in the questions if we're not going to hear outlook? Because that's what most of the questions are doing, and that's what generally skews the market is the answers to the questions. So it's an interesting thing moving forward. We'll see what we get. Like I said, the actual FOMC statement was very short, much shorter than previous statements. So less in-depth, much shorter than previous statements. So we'll see what this means moving forward, guys. And yeah, very interesting day nonetheless here. What did you guys think? The world is a stage. You'll get the best signals on this channel. I don't give out any signals, bro. I don't even know what a signal is. In fact, chat, answer right now, what is a signal? Because I don't know.
It's an app that lets people talk privately.
Is it? Yeah, it's a movie with Lawrence Fishburne. I know that.
Yeah.
Yeah. I know. I'm on it. We're starting to dump. Yeah, I mean, we're down for sure. NASDAQ falling. Gold has really not stopped dropping here. Because one of the net effects of this is higher yields. I think it's just a reaction to the dot plot. I think maybe we rebounded. People thought he was going to be more dovish than expected, but he was pretty neutral, and so markets quickly started getting baked into the dot plot hawkishness that we got. Really hawkish dot plot. It's when you wink at me. Service now, please take a look. All right, dude, you've asked me enough. I got you, bro. ServiceNow is a dumpster fire right now. There you go. Microsoft's probably down too. Yeah, Microsoft's dumping. Software stocks are down. Netflix is down. Google is down. AMD is down. MU is up. Memory prices are still high. SanDisk is up, believe it or not. SpaceX is down. 195s. Yeah. Top 3 signals. Signal is not financial advice, but indirectly tell you to do it. Shh. I don't give out any of that stuff. If you lose, it's not my fault. Basically, enter the stream with that understanding. You lose, it's your fault. Not mine, brother. Not mine. Robinhood. Robinhood's bumping up here. Doing really well. No PDT, SpaceX, and more. Making Robinhood jump. Software as a service are down. Yeah, SaaS. Yeah, they're down for sure. They've been down though. Honestly, we've seen like ServiceNow, we've seen CrowdStrike, we've seen a lot of SaaS services companies go down for sure. I mean, it makes sense why AI is basically replacing the. I mean, you can create your own software now very quickly, very easily. Shout out to Claude, but because of that, less people are going to buy it. There's going to be more competition in the software companies that are out there already, because AI is creating so much competition now, not just in terms of the native user, but also in the companies, right? More competition all around for software companies, worse margins because of that, lower pricing, less revenue, and, renders a lot of them obsolete as well if we're looking at it objectively. So, yeah, we've already seen those moves getting baked in, but same software as a service apocalypse story, basically, yeah. VIX is up. Yeah, I mean, VIX is up, markets are down. NASDAQ is down. We'll see if we crack these lows. Like 30,000, guys, is right here. So 30K is right underneath us. I'm going to wait and see what happens there. But the market's looking really scary, to be honest, right now. Really scary. Yeah. And it looks like we're going to at least test 30K. At least. Yeah, look at these drops. Still falling. There we go. Just dumped down underneath that 30K, that low of the day level. So the NASDAQ just cracked lows. 30,000 is right underneath us here, chat. Right underneath us. Yeah, yields are up for sure on this report. It makes sense why. Higher rate cut odds, or higher rate hike odds, higher rate odds in the dot plot, worse inflation expectations in the summary of economic projections, and more. All of it basically pointed to higher yields, and you can see yields jumping. Here's the 2-year yield. It's gone up a lot. Here's a 5-day chart. You can see how much the 2-year yield has jumped here, so scary. And the NASDAQ is looking really bearish here, but generally it goes down after the FOMC decision, so it's not it's not unusual to see it go down like this, to be honest. It's not crazy, you know. Here's a little rebound. I want to see 30K. I think we might break down to 30,000. And then we'll see. But falling. Yeah, we're close to 30,000. Yeah, it's definitely scary right now. It's definitely scary. It looks like we're going to go down to 30K, is what it looks like to me. But more drops. NASDAQ down to 83s right now, so. Surely break. I'm going to get some music going because it's a little boring here without music.
Yeah, dude, play Freebird.
Yeah. I wish I could. I think this is better. It's like Tron music. All right, NASDAQ at lows of the day here, guys. At lows of the day. A lot of fear getting priced in from this FOMC at lows. NASDAQ right at lows again. Gold has been on a big downward spiral, though, man. Got a little rebound here. Big pop up. SpaceX looks like it could break. Yeah, SpaceX. Is it Task Force music? Like I said, I'm going to start a task force to get more snacks in my house. Again, the chat immediately dubbed it Snack Force. Said we should all get rings, the members of the task force. My response was ring pops. You know, I think there's no better ring than ring pops for that. Are ring pops still around anymore, bro? I used to love ring pops as a kid. Not the time to buy gold? Yeah, probably not. I don't know. It's long-term, gold might be good right here. But short-term, I'm not buying. Get Ovaltine decoder rings? Yeah. Ring pops are still around. I run to the grocery store for 30 minutes, everything tanks. Bro, it's a bad time to go to the grocery store, brother. Just check gold and yields. There's always chance of recovery, bro. It just depends on what time frame we're looking at. We might be looking at super long-term time frame. Maybe not. Call of the NASDAQ right now. This is not financial advice. Definitely not financial advice. In fact, I don't even give that out. I don't even know what that is. I definitely don't put it out here. Again, if you follow somebody called Beginner Trading, I'm not going to say, like I always say this, but if you follow somebody called Beginner Trading, I'm not saying you deserve to lose. But, you know, my channel's called Beginner Trading, guys. You know? Also, if you want to help support my channel, check out Lucid right now. Lucid has Lucid Flex, which Lucid Flex is the single best eval, I think, in prop firms right now. Lucid Flex. Once you're funded, the rules in Lucid Flex are great. No consistency rule, no DLL. Lucid is great overall. They've paid out $150 million to traders, 250,000 use them. Average payout time is 15 minutes. Mine was 1 minute. They allow 10-to-1 micro scaling and more. 90-10 split, no payout windows. Just good all around. Just good all around. Check them out. Here's the link if you want to help support the channel. I appreciate it. But it's definitely looking a little bearish here. Definitely looking a little bearish. You can also check out Apex. They have a 90% off sale. Super cheap, $17 accounts on Apex right now. So if you want a cheap account, Apex is probably one. Here's the link for that. Again, they're an affiliate of mine. I'm biased. I get paid by them. So NASDAQ just cracked lows again. It's getting down to 30K here, guys. Look at it. Almost at 30,000. Does code BGT work at Kroger's? It should. You know, advocate for that. You know, tell them free banana every time you use code BGT. It might work.
Discount card.
Yeah, listen, it might work. Try it. You know, I can't guarantee it will, but try it. You know,
I've got a complaint, John. I tried to use the BGT thing at Costco, and they just would not take it.
Yeah, listen, that's because I don't like Costco, bro. I went there on a Sunday. It was like the airport. I don't like it at all. Look, here's 30,000, guys. Here's 30K. We're right at 30,000 right now in the NASDAQ. Big dump. Big drop. Gold breaking down as well. 30,000 is right here. We'll see if 30K props us up. Do you have a task force, John?
Force, John? No, John is a task force of one. You know,
it's snack force. You know, snackers unite. It's snack force.
John does love snacks. I will say that.
Like I said, once you get in, I send you a ring pop. You know, and all the members have them.
You ever tried biltong like I told you to, John? I bet you didn't.
No, I didn't. I don't even know what that is.
Try that. It's like an African air-dried turkey.
Real quick, NASDAQ is breaking down here. 29,950s, under 30,000. Under 30,000. NASDAQ is dropping here. Yeah, sell-off is intensifying. I usually don't stay this long after the Fed meeting, but dude, look at this. Yikes, dude. John is the task force. Bitcoin. Yeah, Bitcoin's falling too. I didn't have to look at it to see it. I didn't even need to look at it. But yeah, Bitcoin down to 64s again. Made my week. Well, I lost one funded account today. But it was basically a goner anyway. We made money in the other one. Yeah, I like carnivore snacks. Those are good. They're expensive and they take a long time to get to you, but they're good.
And that's what I was saying. Like, you could honestly probably substitute biltong for that, and it's cheaper, and it's, in my opinion, a little better. But the carnivore snacks are really good, though.
Yeah, they're good. Look at oil, guys. Oil at 75.30s. 75.30s. Will the NASDAQ get back over 30K here? Yikes, dude. I don't know if it's that bad. So Iran did release the full text of the deal.
BlackRock is filling orders like McDonald's right now. I hope not. McDonald's is terrible.
Yeah. Selling because of Warsh or data? I mean, what data? You know? It's selling off because of yields. Oh, you're talking about the summary of economic projections. I'm sorry. It's probably the summary of economic projections. It was hawkish. And then Warsh was neutral, so it didn't really ease some of those concerns from the SEP. And so it's from the data for sure. It might be a little bit from Warsh too, but it's mostly from the data here. I don't know. Let me know, chat. What do you guys think? Is this drop from Warsh or the summary of economic projections data? Put Warsh or data, depending on which side you choose. I think it's from the data, personally. The data was bad. Went for a green day. It's pretty red today. Yeah, it doesn't look good right now. Yeah. Alright, let's see if we get some support, but we've had a lot of red. Show up a lot of red. Tomorrow we do have jobless claims, unemployment, and more going live too. So we get some jobs data tomorrow. It's not big jobs data, but it's something. Oh, tomorrow is triple witching for Thursday. You're right, my friend. You're right. I forgot. Markets close Friday, so all major contract types expire tomorrow instead. This is heading into tomorrow, which might get crazy. We'll see. But, market always overdoes it. Yeah, they generally overreact. But look at these drops, dude. These drops are still here. Alright, so I asked people data. Yeah, most people say data. I don't see anybody that said Warsh, really. Warsh didn't really give any answers. So unless the reaction is because of the more vague responses from Warsh, it's got to be the data, I think. Ryu, bro, are you talking about my music, dude? Come on now, bro. Look, I'll find the perfect song for you, alright? I don't know what kind of music to play right now. I feel bad with the music playing super happy or like calm music because I think the market's going down. Market closed Friday. Yeah, market's closed Friday. Master
like
P.
Jimmy Crack Corn or something.
Yeah, NASDAQ testing lows of the day again. 29,940s here. Yikes, dude. Where's gold at right now? Gold still breaking down here. Market closes at 15 minutes. I guess I'll stick around and cover the close and then get out of here, but yeah.
And I want you to sing a song, John.
Me? Dude, I got the voice
dude.
of an angel. Some people have said I'm the songbird of my generation, you know?
Yeah.
Y'all gotta pay more for that. Y'all gotta pay more for that.
John's like the Danica Patrick of singing.
That's right. Yeah, you know. Bond yields doing it. Yeah, TLT is gonna be going up. Or no, TLT's been going down, I'm assuming, right? No. TLT is bond prices, so it should inverse yields and go down. No? It's not really moving that much. It's doing better than a lot of people might think it is. Did everybody think the charade was going to keep going? Dragging it out isn't the inevitable market pumpy news. Google at 361s. Where's that quantum at right now? Quantum breaking down too, man. A lot of stuff red. Except for memory. Memory's still green on the day, despite the red aspect of everything. SanDisk just turned deeply red, though. Look, not deeply red, but SanDisk did have some pretty green, pretty red candles just now. Interesting. SanDisk went red on the day. It's now under 2,000. Now I gotta zoom out on the 5-minute. Look at gold. You know, I hate to say this. I don't really hate to say it, but I don't mind buying gold at these levels long term.
Yeah, do we think... I wonder if it's going to keep falling.
I don't know, dude. ARM's doing pretty good. MB will be fine. Look at gold. We're overdue for a recession.
I mean, technically we had a small one in, what, 2023?
Yeah, so basically what happened is that 2020 hit. I can't remember when the recession hit. It was either 2020. I think it was 2022. I might be wrong though. But it was 2 consecutive losing GDP quarters. It didn't stay down there long. I'll have to remember what it was. But it was technically one, yeah. Warsh. As long as Fed's pumping extra money. Yeah, I think it was 2022 personally. But yeah, it was.
It might have. I knew it was either 2022 or 2023. I wasn't sure, but I just know. I mean, technically, it's 2 back-to-back quarters of negative growth, right? So
yeah, that's what we got at the time. We rebounded pretty quick from it though, so it was a mini one, if that. You know, I think we're pretty much guaranteed to recession this year. I don't know. We have GDP next week, which I believe is quarter 2 GDP. Let me look. So we do have GDP next week along with PC inflation. Yeah, like look. So we do have GDP. Oh, it's first quarter.
It depends on what the task force is for.
Yeah, I don't know. Oh, go ahead, Britt. Sorry.
I mean, I was just expounding on that comment, like, because depending on what it's for, I mean, my members are definitely going to change. I mean, like,
yeah,
is it an action-oriented task force or an intellectual pursuit?
Yeah, we should start a task force to bring the lurkers out of lurking. But they might rebel against that. They might rebel against that though, and create their own task force to stay lurked. Is that a word?
It's okay. Then we'll create a counter task force to their counter task force.
That's right. Hey, I'm down to do it. Warsh would probably approve of it too. All right. Anyways, we got quarter 1 GDP coming out. Previous was 1.6%. This is the third final estimate for quarter 1 GDP. So I don't know. We could hit a recession this year. This would have to keep trending down. It was 2 point something last year. This would have to keep trending down. But we're still positive right now, but I don't think it's going to be, I guess, I don't know what quarter 2 is going to look like. I really don't. But we'll see. Snack Force. Yeah, last quarter was 1.6. Or it's quarter 1 currently is 1.6. Thursday next week on June 25th, we'll get the finalized version of that though. So it's what's called the final estimate or the third estimate. It's going to be the finalized version of quarter 1. It happens, like, you got to think about it. We get GDP every month, right? And there's 3 months to a quarter. And so we get what's called the initial estimate, which is the most variance heavy one. Also the most market moving one. And then we get the second revision and then the final revision, which is next Thursday is the final revision for quarter 1. So it'll basically be the finalized version of quarter 1 GDP. Last time it should have been 1.6%. We'll see if they move it back and forth from that number is what it is. So Yeah, jobless claims expected tomorrow. Yeah, we get jobless claims tomorrow. I'm trying to see if we get anything else. Yeah, we get jobless claims, Philly Fed, and other stuff. Friday markets are closed. How's the NASDAQ doing? It's starting to gain a little bit of... Oh no, look at this drop. NASDAQ still falling under 30K again. Starting to test lows again, guys. Look at the NASDAQ drop. NASDAQ still falling. Lurk force. If oil keeps dropping, kiss recession possibilities goodbye. Yeah, it's a big if, but yeah, I mean, I agree if oil bounces back, or if oil fades back down. All right, NASDAQ just cracked lows of the day again. 926s, 930s. Lows of the day now in the NQ. All right, we got 9 minutes until the close here. We should have the MOC data coming out soon. The MOC data just dropped, actually. That's probably what pushed the market down now that I say that. It's 10 minutes before close. 29,930s here on the NQ.
Wait for 3,600 gold, then buy hand over fist. If it hits that low, I am buying gold.
I'm not mad at that prediction. I'm okay with 3,600 gold buy. Especially long term. I think, you know, it's still pretty cheap, all things considered.
I agree.
Especially if inflation's a big fear over the next few years, right? Like, even though yields are going to, you know, push bonds higher, I think people still are going to hedge some with gold, but it also depends, like I said, going back to that dynamic though, higher yields lately has been making gold drop. Has been making gold drop because more people are buying bonds instead of gold with higher yields getting paid out. And so it just depends on whether you think yields are going to continue climbing, I guess is the argument for gold. If they continue climbing, it might pull back to 3,600. We'll see. It's down a lot on the day too. It was at 44s. It's now at 42s this morning, from this morning. So
if it goes that small, I mean, if it goes that low, I'll probably pick up something, you know, something modest, 20 or 30 ounces, you know.
Yeah, you know, I might pick up a ton, Brit.
I'm kidding.
You know,
I'm kidding.
Chump change, you know.
Yeah, you know.
A ton of gold. Yeah. The Judgment Day is here finally. What did I miss? Why is it all dropping right now? Alex, everything is dropping because the summary of economic projections the Fed put out was much more hawkish, meaning restrictive, meaning higher yields than expected. Higher inflation expectation, higher rates expectation, weaker GDP expectation here. And Warsh didn't really go into much. He didn't really give many, you know, answers or forward predictions regarding things. He kept it very tight, very vague. Didn't really want to give forward guidance. Didn't really want to give a base case. Did say that would combat inflation, but all of that stuff is making markets nervous right now. Is basically what's going on. Yeah, Kat, you're a little bit delayed on the stream. Hit the live button. All right, there's a little green candle, though. We're starting to move back up. How much time we got until the close? 6 minutes?
6 to 7.
Yeah, I don't know anything about NVA, to be honest. Nova Minerals. I don't know anything about it. It looks like a bull flag on a long-term chart, but it is kind of a penny stock, so I have no freaking idea, brother. Good luck. I hope you make money.
Honestly, I just haven't been following it very much. Have we seen any new developments in like the American rare earth minerals market?
What was the way you liked USAR? Was that it?
Yeah.
It started to rebound back up, so they've been pretty strong lately, actually.
I'm just curious if the sector's begun. I mean, if they're beginning to build the American sector out at all yet.
Yeah, my Twitter's down right now, Alan. I'm working on getting it back. I'll get it back. The bots go out of control over there sometimes. I looked it up. It's happening to a bunch of people, so I'll get it back. Might be a little bit though.
For the love of God, what is your Twitter?
Yeah.
Honestly, I think he has been asking for like 2 or 3 days.
I know. To be fair, yeah. I'm sorry, dude. I'm sorry. Gold dropping.
I'm sorry. I just love the final. Like, for the love of God, tell me.
I know. I heard it in a really desperate voice. You know, like, please tell me right now. I'm trying, dude. I'm trying. Look, Nasdaq.
Honestly,
Nasdaq back to 30K. Nasdaq back at 30K.
Yeah, I feel like I did not answered him there. He'd have been gone.
All right, we're at 30,000 plus now. Look at this, 30,020. So Nasdaq's starting to fight its way back up ahead of the closing bell here. Where's SpaceX right now? SpaceX is down to 190s, dude. Bitcoin now gets its final flush.
You can't hear that, can you, John?
No. Whatever it is.
Yeah, I'm eating Cheez-Its.
Do I hear you're about to play Overwatch with me? Is that what I hear? Yeah.
I don't think you hear that.
Bro, I'm pressuring Brit to play games so much. I'm like, dude, play Overwatch, dude. You know? My son will play with us, too. Although he's an angry gamer just like Brit, you know?
Yeah, it's a good thing we can't talk to each other. Otherwise, you hear nothing but yelling.
Yeah.
I don't know. I might play a match or two.
All right. Let's play. I would ask the chat to play, but I'm kind of nervous about that. I don't know if I want to give out my gamer tag handle, dude.
Yeah, plus, it'd be kind of hard to play with like 1,000, well, probably not 1,000, but
yeah,
300 people spamming, game and party invites.
I'm a damage guy, Philip. You know, I go with Bastion usually or Diva. Anyways, hey, 3 minutes left, chat. 3 minutes. NASDAQ consolidating right at 30K, like right at 30K. Overwatch stream. Nah, I play Halo. I play a little Call of Duty. I play Overwatch.
I'm just gonna assume that guy asked me to, so I'm a Reinhardt main.
Yeah, we need Brit Shield. All right, look, gold still 42.60s. NASDAQ 30,000. Market closes in 3 minutes here. 3 minutes. Hey, thank you, Enoch, for joining the stream, my friend. I've thought about Arc Raiders. I just haven't gotten into it yet, but I thought about it. I tried to get Brit to do it. Hey, nice Charlie show. Congrats, bro. Good job.
I just heard Arc Raiders was kind of not a letdown, but just wasn't anything what they predicted it would be in terms of popularity.
Yeah. Posted a Discord, no one ever goes there. 3,600 would be the last major accumulation zone for gold. It's always back tested. Yeah, I like gold at 36 for sure. I like it right here, to be honest, if we're talking like a decade plus. Usually pretty solid. Then anyways, CoreWeave is breaking down too a little bit. It's under 115s right now. Yeah, I lost one too, Charlie. It's all right. It happens. Listen, part of, especially like prop firm trading, you're going to lose some accounts. It's just kind of the nature of the beast, so to speak. If you got to take risks, you got to lose eventually, but at work we call 7:15 a.m. John time. It is John time. SpaceX is double. Yeah, SpaceX, guys, is all the way down to 190s. 191 right now. It hit 187s. Soldier's all right. It's just his health is weak. You know, he's got weak health.
You got to use angles and use your healing sphere sparingly.
Yeah, my son plays with this. My son likes Soldier.
Well, realistically, you got a pot shot and use his speed to get out of the range of fire. You got to remember to run away.
Yeah. Look, NASDAQ at 30K. Let's see if it closes right around 30. I still think tomorrow's big. Tomorrow is Triple Witching Day. It is the last day of the week. Markets are closed Friday. We have jobless claims, unemployment. Next week, we got GDP, PCE, and more. And this Fed meeting might continue to shock markets moving forward into tomorrow. So tomorrow's a really interesting day. We will be live always at 7:15 Eastern time tomorrow in the morning. And let's see. I bought Netflix earlier. I'm not really doing well in it, though, but luckily it was small. I'll probably keep adding to it. I think right here is still probably okay for Netflix, but I'm not an investment professional. I have no idea what it's going to do. It could crash tomorrow. But it doesn't look bad to me right here for Netflix long term. Yeah, Corey. Yeah, that's probably true. All right, guys,
Honestly,
40 seconds. 40. It's the last minute of the day, guys. Last minute of the day. We have 30 seconds left. 30 seconds left. Let's see where gold. Let's see where the NASDAQ closes. I want to see where SpaceX closes. What were you saying, Britt? As long as it's not video games.
It's not. I was just going to say you should include that John time thing as like a count-in timer for your intro. That'd be funny.
Yeah, for sure. John time. That's right. Yeah. All right. Last 15 seconds. Markets are about to close, guys. Let me know if you like these after-hour streams, too. I don't mind holding them. But, let me know. And here's the closing bell. 5, 4, 3, 2, 1. Let's see if the NASDAQ closes right at 30. All right, NASDAQ is now closed. Right around 30. All right, guys. I'm done for the day. Again, if you want to help support the channel, check out Apex. Apex has the cheapest accounts in the game. You can also check out Take Profit Trader. On Take Profit Trader, guys, you can take daily payouts. So a lot of people use this, and they take daily payouts from their accounts that they get. A lot of good rules for beginners on Take Profit as well. And so I'll throw that link up here as well. And yeah, I appreciate you guys hanging out with me today. Appreciate the love and support. We'll see you guys tomorrow bright and early. And yeah, y'all be good. Have a great day. Be safe in these markets, guys. You can find the links to most prop firms that we have in the description. Use coupon code BGT at checkout. You'll get the, full discount, whatever you do.
The discount.
Yeah, listen, I gotta delete it. It's not 50, it's 40% off right now, I think it's 40. But yeah, guys, y'all have a great day. I'll see you guys tomorrow bright and early. Thank you for the support. Thank you, Clee, Max, Keo, Charlie, Charity, Rami, DJ, Pella, Super, Charlie, Corey, Dog, Super Villain, Mart, Steve, Stay, Chom, Brendan, everybody else here. Have a great day. Stoic, Max, Shar, Seton. Hey, later, guys. Y'all have a great day.
Have a great day, everybody. Later, Keo.